Welcome to the Audit, Risk and Finance Committee meeting, ARF 26.3. Now we have an apology for lateness from Councillor Joyce. Do we have any other apologies? No? Great, thank you. Yeah, can I have a mover and a seconder for that, please? Councillor Murray-Benge, Councillor Elvin, thank you. Right, I'll open the meeting, if you'll just bear with. Right, I thought because it's the month of July, we're a fortnight from Bastille Day, and me being a francophile, for those of you who didn't know that, I just wanted to read out a little quote in French, so please excuse my dreadful French. Le plus grand don de nos ancêtres est la liberté. This means the greatest gift our ancestors gave us is freedom. Right, so moving on. Do we have any late items? No, okay. Any declarations of interest? All interested, that's a good start. Right, no public forum. Rightio. Okay, so we'll start with the Bancourt Treasury Advisory presentation, please.
So I'd just like to introduce the piece. So this morning we've got a presentation from our Treasury partners from Bancourt. So we've got Suresh Ranchwood and Monica Burbich. So Bancourt plays a key role in advising council on our borrowing, our liquidity, and also our interest rate risk management. So they're going to talk to that today, as well as some key Treasury topics and concepts for wider understanding. So I'll pass over to Suresh and Monica.
Button. There we go. Thank you for having us here again. I think I've met some of you previously, and I was just trying to think how long we've been advising Western Bay, but I think it might be 19 or 18, 2000, something like that. But yeah, we will go through the policy and the structure that how we manage interest rate and debt, and Monica will lead most of that, and then we'll take questions and issues or concerns from councillors around how we do all this.
Kia ora tātou. We're obviously aware that there's different levels of finance understanding, so I'll talk through things, but as we mentioned, we've got questions at the end. So just wanted to give, on the first slide, an overview of Bancorp. So it's established in 1986, and we do a range of both Treasury advisory, which we cover, but we also have corporate finance and wealth management. We work across all sectors, and I think the key thing is that we're independent from banks and other advisors, so we basically receive fees from clients, so that provides an unbiased view. We just wanted to highlight that we've got quite a lot of experience in the council and territorial local authority space. So we have approximately 220 current clients across New Zealand, of which 50 are local government entities. And we've also got Bancorp locations with offices in Auckland, Wellington, Christchurch, as well as Australia. And then we've got affiliates in London, New York, and Singapore. So that's a bit about us. Just on the next slide. So sorry.
No, Murray-Benge has a question.
Who are you answerable to? You're independent, but you must have someone. Which ministry are you responsible to?
We're responsible, obviously, clearly to our clients who engage us. That's our key, obviously, our responsibility, who engages us to manage their risks. But where Monica was talking about our independence, where I think that if that's where the question is sort of tilting, is that we're not affiliated to a bank or a lender or say LGFA, we're completely independent. You know, we're a bit like a lawyer or an accountant on an hourly rate or a retainer. So there's no other incentives behind us that would suggest, you know, we're clipping a ticket with the LGFA or anything like that. So that's what that means. We're purely employed by the council to act on their behalf in their interest.
And I think just to add to that, so which we'll go through on the next piece around Treasury policy, is that the clients that we deal with, they have regulatory or legislation that they need to comply with. So we ensure that that's covered in the Treasury policy and that we're managing the risks or the exposures in accordance with their regulatory and legislative requirements. So that brings us to the Treasury policy. So it's a governing document which basically sets out the parameters for managing the exposures that the council is exposed to. And when we talk about exposures, we're talking about there's a range of Treasury risks. So that includes finance risk, funding risk, liquidity, debt management, interest rate borrowings. So that's all covered in the Treasury policy. And as I referred to earlier around regulatory requirements, so the Local Government Act 2002, that has a requirement that there's a liability management policy and an investment policy for the council, and that's incorporated in the Treasury policy. I think an important piece is the Treasury policy also outlines the roles and the responsibilities. So it shows governance by having the responsibilities of the council, this audit, risk and finance committee, and then the CEO, CFO and financial analyst. So it just shows that there's a governance framework with responsibilities for each of those roles. And it's covered in, that's basically the cover page of the Treasury policy in your policy document. Looking at the next slide. So now going into the Treasury policy, and what we wanted to talk to was basically the key risks for the council, and that's covered by funding risk. So obviously there's a capital program which goes through a process of being approved by the annual plan or the long-term plan, the LTP. And from that, we look at, well, how do we manage that borrowing requirement to ensure that there's no refinancing risk, such as, you know, a whole lot of debt falling due, and then it might be in a circumstance where liquidity is tight and therefore it increases the cost for the council. So very much in this funding risk piece is ensuring that you've got adequate funding, but as well as interest rate risk management, which we'll come to, we do try to ensure that we minimise the cost of funds for the council, because obviously that's borne by the ratepayer. So as it mentions, there's the policy in place. So the table at the top, that shows the parameters that we try to manage the funding risk within. So that's the need to borrow. The chart at the bottom, a few colours on it, but I think the easiest way to think about it is that the table at the top has policy bands, so time bands, so 0 to 3 years, 3 to 7, and 7 to 15. The red lines in that chart are basically the policy minimums at the bottom and then maximums at the top. And then we've got the dollar amount on the left-hand scale. So in terms of managing policy, as long as we're within those two red lines, that's compliant with policy. Anything above or below the two red lines is not compliant with policy.
We have a question, Medina.
Thank you, Madam Chair. Could you explain why, when we fund infrastructure, we normally debt fund it over 30 years. Why are the debt maturities not anywhere close to that? I mean, they're mostly less than 7 years, it looks like. So what's the rationale there?
Right, perfect. A good question. Funding risk, right? Funding risk, just coming back to that core thing, to us, when we look at funding risk, it's your ability to borrow money at a point in time. So that's why we spread it over a number of years. So say, for example, on the 7 year there's money due in 7 years that you've got that nobody, well, in theory, hopefully nobody comes and asks for it back because you have been committed to borrow that for 7 years. right? So that's why we spread our maturities, because we don't want all our eggs in one basket. We're borrowing just for 3 months or 1 year. Every year we've got to go back to borrow that. Now, we do not know what the conditions are in terms of the market or in terms of the Western Bay's credit metrics, where people go, well, we're not lending to them anymore. So that's why we spread maturities, so we don't have a concentration of refinance risk. Now, going to your concept there about 30-year debt, New Zealand certainly doesn't have the depth of market that somebody will go, right, I'll lend to you for 30 years, right? Now, in saying that, people get mortgages in the 30-year mortgages, but, you know, the 3-year or the floating or whatever. So we don't have that. In the US, you can get depth of market that will people will borrow for 30 years, but it comes at a cost, right? Because going back to the old economics principles, if somebody lends to you for a year versus 30 year, there has to be a premium or an additional cost, and that additional cost is a higher credit margin, right? We don't have the chart here, but the longer you borrow through the LGFA, the higher the credit margin goes. So as an example, I've got these in here. If you borrow for 2 years, you know, for your credit rating would be 50 basis points. You go out to say 35, which is roughly 10 years, it almost doubles. So part of our logic is that we want to make sure the council has sufficient funds, no refinancing risk that's going to impede it, at the same time as trying to minimise interest costs.
And we
The
have
longer
another
we borrow-
question, Councillor Joyce.
The couple of things in there. One is that we've got a certain amount of bank debt. I don't know if this is a question for staff or for you, but how does that affect our cost of funds? Is that higher?
Sorry,
It's got bank debt in there.
Yeah.
I wasn't aware that we were borrowing money from banks.
the bank debt is generally short.
What's this, 3 to
It's a
7 years?
facility. It's not, it's an emergency funds.
So we aren't drawing on it. That's the one we're not
We're
drawing.
not drawing on it, but
Thank
we
you.
pay a
It's
line
just
fee.
up there showing us in the 3 to 7 years. The other question I had, and forgive me for lateness, and if you'd already covered this, but our credit rating has just changed.
Yes.
So how does that change our cost of funds, please?
Now, the credit rating through the LGFA, our borrowing, what it means is your cost of funds on new borrowings has gone up by 5 basis points. 5. So as you go down through the spectrums between unrated and where our previous rating was we were getting a 20% saving because of our high rating. Now, because that's come down, now on future borrowings, it's only going to be 15, not a 20-point saving, right? If we had no rate, if we had no rating, then we pay 15 basis points more.
Okay, so one of the things that's happening to us, of course, is that between 80 and 90% of our debt will pass off to the Waters Company next year. And the question has arisen, should we maintain a credit rating with our borrowing levels being at a much lower level?
Yes.
But so I guess that's a difference between what it costs to get a rating and what it costs. If unrated debt is charged more, we'll need to balance those two sides.
Now that's about, I think we've worked out the numbers about 45 mil, I think, is the round number, because we pay the fee in Aussie dollars. So we just, so a bit of currency in there. But yeah, it's in the future plans of Western Bay, will there be more than 45? And it's probably likely.
$45 million in debt. You mean?
Yeah.
Yeah. Okay. So that's the crossover point.
Yeah.
Okay. Thank you.
If you gave us a plan that said, look, we're never going to go above 40 again, then it becomes, well, we probably don't need it. Yeah.
You have another question, Councillor Daly?
Suresh, is it?
Yes.
Suresh, can you finish your answer to that last question about how through LGFA, the longer you borrow, the higher the margin, is it?
Yes.
Yeah. Can you just, it seems counter to what we're trying to achieve with the Three Waters, where we're looking at longer term debt, and now we're effectively being penalised for it through LGFA, which is the mechanism set up to give us that facility.
And LGFA, remember, borrows borrows as well, and then obviously they're just an internal entity that sees the cash come through to the councils. But the longer they borrow, they pay a higher premium as well, right? So they're passing that on. So anybody that is lending money for a long period of time will demand a premium, and that higher that premium, increases the interest rate that you pay. Now, we're always wary when we manage risk for councils, because councils have LTPs, right? They used to be 10 years-ish. So that means you set what you think you're going to do for 10 years, and that changes every 3 years, really. So, and obviously what the debt is forecast to be today will be very different at the next LTP when you get a whole new council or whatever, and they change what they believe they should be doing. So we don't like, I don't think it's possible to borrow for 30 years in New Zealand. You could do 10 to 15, right? In some councils, and we can go to 10 to 15, but we've been going short more recently because interest rates have been so high. So, and as I think all councillors know, that rate charges are an issue, and we don't really want to lock in high cost of funds if we have to. And certainly in the last 2 to 3 years, it's been very challenging because interest rates went through the roof, right? Interest rates went back to where they were, goodness, 15 years ago, and have been unsustainable, and we've seen a fall. So it is a kind of a bit of a dark art. We can't lock and load high cost and just say, right, we're building a 30-year asset, let's lock and load 30 years of funding at a point in time. If
Thank
that
you.
makes sense.
Councillor Murray Bench.
No dumb questions.
No dumb
Yeah.
questions.
Trying to understand it all. How do we get back to the credit rating that we had?
Well,
What are
that
the-
would
What are the obstacles?
cut spending, I think.
So I'll just quickly. So there were two. So there's a paper further on in today's meeting, but just briefly, there were two key reasons for the downgrade. One of them being our infrastructure spend over the last 1 or 2 years. So that's been a lot higher. And the other point, where there's been a lot more focus from S&P Global Ratings on our contingent liabilities. So even though we shift a chunk of debt, 86% of debt across to the waters entity, S&P will still take consideration of that as a contingent liability on council's books. So they're taking that into consideration when they do their rating. So we're not directly liable for it, but it sits on our balance, or not on our balance sheet, it sits in our notes to our accounts as a contingent liability still for council.
Councillor
Am I right in thinking it's a slight warning to us?
So the downgrade to AA minus is now coming with a stable outlook. So while they have dropped it down, we were AA negative with a negative outlook. AA with a negative outlook, yeah. Thank you. So the negative was the warning part. So that was an indication that we could trend down in the future. They've now followed through with that, but we're now at a stable outlook. So they're comfortable with what they've seen in our numbers and how they're doing their forecasting going forward.
And I'll just add, we've narrowed the gap between us and Tauranga, because Tauranga's at A+. So we're still better than Tauranga, but we were quite marginally wider. And my opinion or view would be that if markets or global markets are looking at this region, they're going, these places are basically joined at the hip. Why is there such a gap? Although Tauranga spending's been higher.
So through the chair, just to clarify, and to your point, councillor, now that the credit rating agency is looking to view both entities basically with the same lens, I think your question was, is that a warning sign for the future? The fact that the water entity will be able to borrow considerably more as a percentage of their revenue, and it is highly likely to do that as it develops, I would suggest that the risk profile of council being able to maintain or even, maintain its credit rating is probably slim. It would be likely to trend in a downward direction because of that dynamic, which we don't necessarily control anymore. So to your question, yes, it would be a flag in your borrowing considerations. Thank you, Chair.
Thank you. Councillor Alvin.
Thanks very much. Always enjoy your presentation. I think this is the first one I've been to, maybe the second. Second. So you're not working off a high base. It's not off a high base.
No, you're right.
What I'm interested in is any projections around the increasing, particularly superannuation funding, KiwiSaver funding, whether their access to cash in the community for local government is going to get a bit easier in terms of those margins you've talked about. I mean, we've had a dearth of capital in the, investment in the country, savings. So do you think the growth of sort of compulsory KiwiSaver funds, the increase that's happening in there, is going to present an easier outlook for organisations like us to borrow in the future, I guess is my question.
Now, that's a very interesting question, and that will depend on, say, super fund or anything like that, or KiwiSaver investors, fund managers wanting to invest in council debt, right? So obviously those funds are growing rapidly, and they have SIPOs or policies, and depending on what sort of fund you're in, if it's high growth, then it's all going to be equities or US equities and things like that. If it's low risk, then it's fixed income products. So those, and they invest in LGFA bonds, right? And bank bonds and corporate bonds and things like that, and term deposits, which are stable, readily liquid, can be sold overnight and used for cash. So those funds continue to grow. And as they grow, the fund managers going, oh, I've got to buy some more. And so it's always, yes, you're right. It won't necessarily make it easier or reduce the credit margin, because the investors or the fund managers will still demand something, right? And they will look at that based on the risk profile of LGFA, and by default, the councils that are debt is growing, which will also encompass growing water debt, right? So as council debt and water debt continues to grow, and then the serviceability of that from ratepayers and water bills, etc., will come into their dynamic. But I don't think it'll just cheapen the margin, because there's more funds chasing it. There's always going to be a premium attached to reward that risk of investing in councils.
Just to follow up there, cynical view, Kiwis will invest to get a high return from their Apple shares and then complain about the quality of their infrastructure. That's probably a marketing job to do there.
Yeah. Yeah, possibly, but everybody wants the best return they can get. And if you look at New Zealand share market, really hasn't moved a lot in the last 5 years. And when people talk about their KiwiSavers, it's predominantly a reflection of investment into other markets overseas. And on top of that, what we get involved in, which is FX rates, is the Kiwi dollar is devalued quite a bit. We're 57 something. So if you'd put money into the US at 70, you've made quite a big currency gain. So that's another large driver of KiwiSaver investments offshore.
Councillor Joyce.
One more from me. At our previous meeting, maybe the one before, LGFA came and presented to us. And one of their graphs showed quite a marked deterioration across the sector of balanced budget outcomes, councils. As well, we've had a consultancy look at it, and theirs was even more bleak across the sector. Is that a concern for you in doing your job, that the fact the whole sector seems to be struggling to hold itself in balance? And have you seen the effect from that in terms of investors looking at us a bit more sideways?
Not that I do investing, and as I said, there's a pool of money that needs to find a home. So in the year since it comes there. They won't have all their eggs in council risk, but they've got to have some. The problem out there at the moment is there's not a lot of bond issuance, which is what the LGFA does, from corporate New Zealand, because it's a bit rough out there, right? So corporates are deleveraging debt, and we look after a lot of corporates, as Monica mentioned. Councils are a big part, and they don't have the luxury of putting up rates. They can put up their charges, and then suddenly the business tips over. So there's not a lot of new debt that's coming from the corporate side, but there's a lot of debt coming from the council side and the water side. So
I like your line that the money's got to have somewhere to go. That's basically the JGB argument, isn't it? And we don't know where the JGB market's going.
Yeah. And if a fund manager has a mandate, which is low risk, cash, bonds, then, and that fund's growing, they've got to chase it. So that they end up going to LGFA. And LGFA is still, remember, they issue offshore. A lot of that fund comes through there as well.
We'll let you keep going now, Suresh. Sorry for the
No, these
interruptions.
great questions. We'd rather answer these type of questions. So that's all good.
That's great. And I just wanted to point out, so as I mentioned earlier, there's a small amount of bank debt, but the main lender to the council is the LGFA, being the funding agency for all local government. This slide is just looking at the next risk. So that was funding risk, and next key risk for the council is interest rate risk. And as mentioned before, that's managing that risk so that any movements and unfavorable movements in interest rates aren't going to have an adverse impact on the finances for the council, and acknowledging that you've got, as mentioned before, long-term plans, annual plans. You're trying to manage interest cost because obviously that's ultimately borne by the ratepayer. So this chart again has policy at the top, which has time bands, and then it has the minimums and the maximums of policy. The chart below shows what we call debt and cover. So it's debt and interest rate cover. I'll just explain it. So again, along the left-hand axis, we've got the got dollars, and then across the x-axis, we've got time. So the grey area is basically the light grey area is the debt that's approved through the LTP. In terms of what's actually delivered, sometimes there's a difference between that. And so typically in alignment with what S&P does is that we reduce that by 30%. So that gives the what we call core debt, which is the dark grey area. And that's what we manage interest rate risk to, the policy parameters. Again, we've got these two red lines of minimums and maximums. So you have, just like with your own mortgage, you can either have floating rate debt or you can have fixed rate. So the chart shows fixed rate because what fixed rate does is it provides you with certainty on what your interest cost is going to be. So you've got a mixture of fixed rate bonds, so that's from the LGFA, or the green area is what we refer to as interest rate swaps. So I've got a slide to come which will just talk through interest rate swaps. But as mentioned previously, if we're between the two red lines, that's compliant with policy.
I'll just add a few comments. Certainly, since I started looking after Western Bay, debt's grown quite dramatically. And in fact, in the last 5 years, every council in New Zealand has suddenly put the foot down. And, we've seen huge spending, obviously, to catch up with water and all this other infrastructure as well, at a time when interest rates went north. So it was quite challenging and quite difficult managing future interest rate risk when rates were very high. So we all know that 2-3 years ago, we had a cash rate at 550 and we had swap rate. You could go and fix money for 30 years at 550. And then of course it collapsed down. Now we've got another surge up. And when the war started, it came down, and I've been on leave for a couple of weeks, and over that period it's kicked off again. So that's what makes this job interesting in trying to navigate that huge volatility we see day to day, let alone week to week, month to month, right? And positioning the council with our objective is always to try to minimise cost of funds. That's our key one within the framework that we have, our policy bands, and the forecast of debt that you have, right? Now, obviously, you know, we've got a forecast peak there at 450 mil. There's probably a few people here and previously said we're never going to see that. And even as Monica mentioned, S&P haircut all the time because councils never deliver everything they promise for a numerous number of reasons, right? And then overlaid with that in the last 5 years, over 2 different governments was, you know, water assets, you know, 3 waters, and now it's affordable waters, is that all the stuff's going to come out the balance sheet, right? So, and we still don't know how that's going to feed, and we're developing that for the water entities. Once they get going, is whether they'll be regulated like power companies. You know, we don't know that, right? So doing lock and load and hedging at rates has been quite difficult. So we've prudently at this council tried to manage cost of funds, and Jonathan's been, you know, had targets that we've had to meet cost of funds, and I think we've done really well. Using the fixed rate stuff that we've got there, plus the floating, right? Floating is not bad because that gives us flexibility. Because floating goes up, so we went to 550, came down all to 225, we're back at 250. You know, it's the blend of fixed and float, which is where we help the council identify and position itself. Hopefully that makes sense.
And I guess just on that note, it is important the forecast debt, because that's your exposure. And what we don't want to do is have a situation where we overhedge, so we put too much fixed rate either swaps or borrowings more than what you actually have debt. And this just in terms of swaps. So if you think about your mortgage, you can either go floating rate or you can borrow fixed for a period of time. What councils and corporate entities have the additional ability to do is to enter into interest rate swaps. And all that does is that you've got floating rate borrowings, and you're going to swap that floating rate borrowings for fixed. And the benefit is you can either do it out of today, which is what is referred to out of spot, or you can have a forward start. So if you recall the debt and cover chart that we're just looking at, towards the end of the debt profile, yes, yeah, it steps down, but over time, if you just picture the green area moves to the left. So sometimes it's not, in terms of the interest rate, it's not favourable for the council to lock in at spot, because it might be, for example, when it was at 550. However, we can do forward starts, which means starting at a future date and going for a future period. And that just means that sometimes that you get the benefit of floating in the earlier period, and then you're locked in. So it's not locking the council in at a high interest rate from today. It's saying that we'll benefit from the floating rate for a period of time, and then we'll lock in to ensure that we're policy compliant and we get that certainty. And this is just a diagram just to show it. Obviously, Western Bay Plenty, you borrow from the LGFA at floating. You then enter a swap with a bank, for example, ANZ, and you swap that floating for fixed. So that's, if you look at the table just at the side, what it does is that the two receiving floating from ANZ and paying floating to LGFA, they offset. So effectively, you've got fixed rate debt.
Any questions?
Councillor Murray-Bench.
I really, it's a question for Jonathan and Aaron, really. It's wonderful that you can inform us as to what our responsibilities are. And the great frustration for us is as elected reps, when you try to do something like the Te Puke wastewater system, it costs a lot of money and you've got to borrow for it and spread it over the life of the asset so that today's people aren't being thumped with the cost. But with the work that you're doing, is it helpful for Jonathan and Aaron? Does it guide them or does it check them? What's the role?
So when we're making monthly or weekly funding decisions, we're in regular contact with Bancorp. So those are the discussions we'll be having, as Monica's mentioned, whether we take a loan today and put it on a floating rate, depending on what the forecasted rates are for the future, or we'll look to take an interest rate swap and lock it in, say, for a 3-year period to know that, right, we've got 4% rate locked in for that three-year period. So those are the conversations we'll have regularly with Bancorp when we're taking those drawings. When we're talking about a bigger project like the wastewater treatment plant, we may loan fund that over a 30-year period, for instance. When we're saying loan funding in that sense, it's an internal loan in our internal loan book that we're using. It doesn't mean we're going out and borrowing 90 million from our GFA to fund that project, because we will have ins and outs of flows through cash flows for the rest of council as well. So we'll borrow to the needs of our cash flow on a regular basis, but not necessarily funding and locking in that 30 years of 90 million debt.
Councillor Joyce?
I'm reading this correctly and I'm not good on swaps. We're turning a 3.5% short-term loan into a 4% long-term loan. So that's the margin that we're paying effectively, because we pay the 0.5 to LGFA, but ANZ won't pay it to us. So basically, you're paying a little bit extra for certainty. And the reason why we don't take out 30-year loans, apart from the fact the market can't cope with it, is by doing it this way, we get a chance to sort of disintermediate the banks, because they'll do whatever you want. If you tell them, I want a 30-year loan, they'll arrange it, but they'll put a margin on it. And this is our way of using Bancorp and our internal experts to not pay that such a big margin as we would to the banks if we wanted to do it through them.
Correct.
So through the chair, just to that point, and I was just going to touch on that, but Bancorp's role with us as subject matter experts, they're living and breathing the market all the time. They are able to transact very quickly. They have all the relationships across a broad market. And that is certainly of benefit when we are looking to move big amounts of money and then manage big amounts of money across time. So we want a 30-year horizon, but we need the flexibility to get the best value across that time. And that's why we don't chunk it out. We do it with guidance on that one.
Councillor Alvin?
What do you guys cost us? What's our retainer? The 20? Is it? I can't remember.
We were on a retainer that was set ages ago, and it's a monthly fee, and we're there available. But yeah, John.
Yeah, it's around $30,000 per year.
Oh, that sounds good value. Don't put it up.
Yeah. Yes, well, and we try to be efficient with what we do. As you mentioned, we come to Tauranga, less so now with the air travel, but we've got a lot of clients in Tauranga, so we all see them in a row, so it's efficient.
And just from a practical sense, what we're getting for that is we'll get monthly formal meetings with Monica and Suresh, as well as many phone calls as Jackson and Monica have on a weekly basis. And so it's very good. Yeah.
And it gets when we need to actually borrow money. And that, I'm trying to loop back to the question to sort of Councillor Margaret, that sometimes we need to borrow money when rates are really high and we'll go, this is not good, we'll go float. And that's where we come and do the swaps later to backfill, or when markets are more what we think are better. And we might not be borrowing at that time, but we'll be doing the fixing at times. And there's a chart to come that shows how volatile interest rate markets are, but we fund at a point in time, right? So yeah, it's a combination of two things.
So don't want you to be overwhelmed by this chart.
Yeah, well, there it is.
Um,
Yeah.
If we look at again, as we have had with the three other charts, time is on the bottom axis. Just on the right-hand side, we have interest rates. And if you just think about what we've been talking about floating, that's looking at the black line and the official cash rate, which the RBNZ sets, and we're all aware that went from 2.25 to 250 recently. So that's the red line. The black line is what we refer to as the floating rates. It's referred to as BKBM 3 months, but don't need to worry about that detail. So that's the floating rate. And then when we talk about fixing, that's the other coloured lines. So we talk about swap rates, and they're based on terms. So whether it be 1, 3, 5, 7 years. So keeping that in mind, what we just want to really show this chart is the volatility that we've seen, pre-COVID actually, but in interest rates, and you've probably experienced it in your mortgages as well, or other investments, is that, we had a period of time when it was really elevated. So RBNZ lifted the cash rate from 0.25 up to 5.5. The swap rates were higher. Those were times, as Suresh said earlier, that we didn't want to lock in fixed rate debt because that would be a high cost for the council. So in those instances, we would go float and then use the swap rates to, once it kind of came down, so you see the coloured lines come down, generally like targeting probably around the 3.5 or even 3 to 4%. So if we can get below 4%, that's ideal. Obviously, at times for policy compliance reasons, it's a little bit tougher because the market might be over 4%. But in general, we have a zone that we try to target, and we watch what the markets are doing, and then we advise Jonathan and the team.
Now, just to wrap that back, these rates that we're talking about here, the market rates, right? So that does not include the margin, as on the swaps chart that Jonathan had up earlier. We pay a margin, right, on our debt. It's a base rate plus a margin. That's up all our funds. What we're managing here is just the base rates, right? And that's what the swap mechanism does. And as you can see, they're very volatile, day to day, week to week. And so we can actually even target levels. We put orders in, we borrow money on a floating rate basis and go, right, we want a fixed rate down here, and try to target it. Now, clearly, what you can see there is, since certainly in the last 6 months, the war has created quite significant volatility and pushed rates up, because it implies that oil prices up, inflation's got to go up, banks got to push up interest rates, right? And we're balancing that against a weak economy as well. So, yeah, that's how we do it. And if the other bit too is, when you think of that chart where we had the debt and cover showing our fixed rate and what is still left floating, the floating is done at the black line at the bottom, right? So at the moment, our cheapest funding is coming from the floating rate. And that's the blend of the two, is how we try to minimize cost of funds. Right.
Yes, yeah.
And then you come to these sort of things, which aren't really helpful. They're helpful for the council. They're helpful for the council to now know what we go through, right?
Yeah. This chart is,
and everybody's wrong, right? So this is kind of like our marketing chart, you could say, is you get banks that go, 1 minute we're going all the way down, next minute we're going all the way up. They cannot do sideways, they cannot do stable. Now, this is all the current forecasts of all the banks, where they think the cash rate's going, right? So you've got some saying we're going to 3, right? And then some going, oh, we're going to 4.25. Now that blue one, now he's down to 4, isn't he? He's pulled it back. But he was 4.25. Now he's pulled it down to 4, which is the red line. And if you go somewhere in the middle, well, it's around 350. So when we've been doing some of our hedging, we're going, well, 350 we can live with. 4.25 doesn't make sense to us, because, you know, that'll nosedive the New Zealand economy. And then you have the dotted line there, which is the Reserve Bank saying, well, we might get over 3, right? So we are slowly progressively navigating interest rate risk and layering and hedging when we can, when we like it. We still like the floating rate, I do. At the same time, which has always been my biggest bugbear, is I've never seen a council hit its LTP spend, right? So that does the heavy lifting. The heavy lifting is councils going, oh, no, we're going to have 100 million less debt, or 200 million, or 300. And that actually lifts our hedging, because in the policy, because we're not going to have the debt we had. So we end up having more fixed. Right, question coming.
I can't guarantee that. I'm just interested in your comment that councils never reach their LTP. But that's only one of the factors, right? We also have internal pots of money that we offset before we come to you.
Great.
So I just want to be clear that it's not all about councils not spending the money. It's also about councils managing cash reserves. And you're looking at the net number, whereas the number you put up before was the gross number. So from what I understand, the 450 million. So, but yeah, so I would suggest that there are two factors here, not just one. One is that councils don't spend all their LTP, and that's been an issue, particularly through the COVID years. And the other one is that we do manage our cash reserves before we go to market, obviously, for obvious reasons.
We have one last question, and it is the last one because we need to get on with things. So, Councillor Daly.
It's just really a general question. You deal with about 50 local government entities. From the point of view of you giving advice to these entities and what the council's staff are looking for, do you get quite a bit of variation, or pushback to what you're suggesting or what you're even doing, managing on our behalf? Or like, is there like a best practice from the council side, from your point of view? What's the sort of pitfalls that you come across dealing with councils?
Now, that's a good question. We've been looking after councils for a long time. So we've built, and we have numerous colleagues, and our head of this local authorities is a guy called Miles O'Connor, and he's been doing it for so long, I can't remember. But we've built up significant confidence in our clients that they do trust what we do. We don't get pushback as long as we're in policy. There have been times we've been outside policy when rates were just ridiculous. And nobody knew what was going on. We didn't know whether we were going to do A, B, C. So we were happy to be just under policy. And then once there was a little bit more confidence and rates were better, we went back in. But there's no pushback. I think if you look at audit and risk committees, as long as we're in policy, they're comfortable, and then they're comfortable with what we're saying around the outlook for interest rates. And, everybody knows the challenges out there in the local authority space with the water. So everybody's still, what I'd say, is cautious around what we're committing and what we're doing, right? And interest rates will do what they do. But we just did not want to overburden or lock in high cost of funds for things that may not happen. But hopefully that answers your question. But we generally see similar behaviour across all councils, whether they've got $100 million of debt or $2 billion worth of debt. Around, it's just the numbers are different, but how things look is very similar.
Just, I guess we all set financing policies and financing strategies. You guys must advise to elected members. Do you get any perverse sort of policies or strategies coming from councils, or they're pretty uniform?
Pretty uniform. Yeah, they're all bound by, LGF, local authority act and everything. And yeah.
Okay, Matthew, I think you want to make a comment.
Thank you, the chair. Thanks, Suresh. Just a question that I thought might come up is, given that next year post Waters we're going to have a debt of circa 50 to 60 million, is it worth continuing with an S&P rating?
It's right on the border. Because I think, what did I work it out? It's about 45. So if you had less than 45, no point. If you're over 45, there's a marginal benefit because, you know, having the rating saves you, what did I calculate it, about 15 basis points, 0.15% saving in interest costs, which offsets the cost of maintaining, is the word, a credit rating. The other softer reasons around it is obviously everybody, Western Bay was quite proud of its higher rating, which has just had a little nudge down. So it's a kind of something, I suppose, to say we are rated, we are monitored by an outside agency, might give ratepayers a little bit more confidence that somebody is looking at those numbers. But yeah, there's a lot of councils that are rated and looking to get ratings as their debt gets up to that point now, even with waters being taken out.
Medenia?
Is there any impact that, you know, we're effectively the parent of the waters entity, which will certainly need a rating. And so as a non-rated parent, is that an issue? Because they talked about the contingent liabilities. So presumably they'll want to, the rating agencies want to know how good we are to give them debt.
So I think there'll probably be merits in possibly keeping it if the S&P or whether it's Fitch that are looking at the water entity as well, then also looking after the council has a better vision over the two put together in some shape or form.
I'll just chip into that. So
Yeah.
the water organisation itself will have a credit rating in time. Well, while it doesn't have a credit rating, it'll use a weighted average of Western Bay's debt and TCC's debt. So it's beneficial from that side for us to have a credit rating. Otherwise, it will drag the interest. No, sorry, the credit rating would be dragged down for the water entity.
And we
our
might
average.
We might only be talking about a year difference anyway with Head Start. So you might find that you need to keep it for a new entity anyway. But, yeah.
And just
Councillor Murray Bench, this really is the last question.
I'll just one thing that as well, we're talking to the rating agencies. So everything's still up in the air, right? We have these entities are kicking off, and we've got a few that we're still, it's all very basic, setting up processes more than anything else. So it's still evolving. So the rating agents are telling us too as well, crikey, we don't know what this looks like, but they're trying to preempt it. So yeah.
At the crucial time of the life of this council, we're a medium-sized council, and I think we're managed really well. As we get larger, do the problems of the larger councils hide their inefficiencies?
I don't know. No, when I think about that is, I think whether you're a small council or a large council, everything's the same. It's just the numbers different. You know, you still have the same people, the same procedures, the same level, maybe slightly less people. You don't have a team of 10 doing this. You can do it with 3. But to us, everything's still, the same. It's just the numbers are different. And we don't differentiate between that. You know, the council or a client with 2 billion of debt, to us, we treat it the same with 50, except the numbers are smaller, if that makes sense. I'm not sure if I've answered the question, but
I think you have. So that's everything you had to tell us today, is it?
as far as we're aware, yes.
Thank you, Suresh and Monica, for coming in. It's
you.
great to see you again.
Thank you. Thank you for keeping us.
Right. Now, can I please have a mover and a seconder for accepting the minutes of the Audit, Risk and Finance Committee meeting held on the 26th of May? Councillor Ray, Councillor Joyce, thank you. All those in favour, please say aye. Against? Carried. Right. Now we've got Jonathan. We've got a bit of a show of one for a while here at the moment. So, although being joined by Kerry Little. So we're going to have an update on the elder housing financial report. Take it away.
Thank you, and through you, the Chair. So the purpose of this report is to provide an update on the financial results and position of our ring-fenced elder housing activity. So the numbers in the report are to 31 May 2026. As a bit of an introduction, we've got 85 elder housing units across our district in Te Puke, Katikati and Waihi Beach. And on average, there are 36 square metre in size. Our weekly rent through our policy, so we've got a policy which tries to drive affordability through the policy. DIA's definition of that is to have 30 to 40% of a resident's gross income as the maximum amount for spending on rent. So as an example, our 1-bedroom older style unit, our weekly rent is $250, and that hits a 26% effective rent percentage, with our policy being that 30 to 40% DIA driven range. When I move down to the financial performance for the 11 months to May, we can see the biggest number in that table that stands out is an unbudgeted subsidy amount. So this amount of $1,779,000 relates to the release of previously deferred funding income. So this is income we've received in the past, both from MBIE through the Better Off funding and through the Ministry of Housing and Urban Development. So this is funding we're now able to record as revenue, as we've had that expenditure come through. So we're now able to record this as income in our books. So it's all coming through in this financial year. The associated project costs through that revenue have been expensed, and that's the reason we're able to now release that. There is a further 404,000 which still remains on our balance sheet and is able to be released as well once the eligible projects have been completed. There's also a capital expenditure number at the bottom of that table as well, which is 83,000 against a budgeted 82.
Jonathan, just on the 400,000, so what other expenditure do we have to come out of that?
So that'll be for future projects. So there's when we receive a subsidy, there's specific requirements that must be met for the types of expenditure.
Yeah.
I'm not certain on the specifics for this one. Kerry may be able to give an insight into it.
Thank you.
But once those are met, then we're able to recognise the revenue against those expenses.
Through you. So some of that was for feasibility studies for other elder housing units that we put through it. And also there was an ongoing, there was a period of time that we had to pay the reserves maintenance out of that. So we budgeted for that in there as well.
Joyce?
Just a couple from me looking at that table. In the original annual plan, we budgeted for nearly 1.2 million income. We're down to about 1.06. So we're down about 12% on where we thought, what we thought we were going to get in. Is that due to vacancies, or, you know, because I thought we were quite full. So why are we running 12% behind on our rental income?
So just to clarify the numbers, so the rental income received to May is 1056. The
annual plan, that's a 12-month number.
So the annual plan 27 is the 1196. So that's next year's, or the year we're currently in now.
Oh, okay.
So the revised budget is the comparative for that revenue. So slightly lower by 20,000.
Okay, gotcha. So we are looking for higher rental income. Is that going to be through increased charges, or is that going to be, because obviously we only occupied some of the flats, I think, during this current financial year, didn't we?
Yeah, so that's partly because it's a 12-month period in the annual plan. We're 11 months in the plan here. The rates this year have not increased, but we do have a full year in the annual plan of the
new flats.
Of the new ones.
Yeah, okay. And when I look at the numbers, you know, the subsidies are a one-off. I guess I'm interested in if the capital expenditure, that's sort of a normal level for a year, because if you take the income less the expenses, less the capex, we're not quite in balance, are we? You know, I mean, the subsidies are one-off. So on an ongoing basis, it worries me that your revenue, excluding subsidies, is about 1056. Your expenditure is about 11. So with that, no, it's not really in balance, is it?
Yeah, so what you're saying is correct. When we apply council's policy of not funding depreciation into that mix as well, which is something we need to consider during the long-term plan, we've got positive current account balances moving forward through that mechanism.
But so, yeah, but as you say, we are going to have to start funding depreciation. So
Yeah, it's something for council to consider.
so we'll
during
have to look
long-term
at that.
plan, correct.
Yeah. So depreciation is the difference at the moment.
Councillor Murray-Bean.
Are our tenants able to get the subsidy from government now?
Yes, they can. They can get the accommodation supplement. Yes, we're in area 2 for the accommodation supplement, both Waihi Beach, Katikati and Te Puke. So they can get up to a maximum of $105 a week for a single or $155 for a couple.
So they have to apply for it?
Yes,
Have they all applied for it?
I believe so. Yes, Hillary's helped a lot of them do that.
Good,
Yes.
thank you.
Councillor Elman.
You might not be able to answer this, but I was really interested in this report. And so what's our policy on elder housing? Is this an anachronism? Do we have a positive process to invest in it? I mean, it might not be the appropriate place to ask the question, but it did give rise to a couple of questions following on from that. And I was interested about the deficit that had sat there for quite a few years. Can't remember what exactly was, and whether that was a intentional decision of council to keep the rents down. Was it just an oversight? And are we looking at some of these credits that are coming in, the $1 odd million and the 400 being absorbed to cover previous issues that should have been managed better? And is that sort of surplus capital that you would ordinarily consider to invest in further rental opportunities if this is a policy of ours? So I know that's a lot of questions rolled into one, but just an overview would be quite helpful for me.
Yep, so I can't answer too much about what happened before I took over the portfolio, but I can say that the rents were very low and we had to do a 2-step process because we couldn't put them up where they should have been in 1 year, because it just would have been unfair. So we put a 2-year approach and we brought them back up to the market rent that was guided through our policy. Some of the units had also they were not disrepair, but they hadn't been maintained to a level that was a good standard. So we've taken care of that now as well. So the units are 100% tenanted. They pay pretty much the maximum that we can pay under the affordable housing guidelines, and that seems to have turned it around. I mean, the government subsidy helped do that quicker, but we were heading in that way anyway.
And just touching on the negative comment, well, not the negative comment, but the negative amount commented on. So the current account balance at the start of the year was 1.5 million as a negative amount. So we've been fortunate to receive the subsidy, and that's brought us back in line. So that was it was resulted from deficits in operating activities from 2015 to 23. In 2023, we engaged PwC to help us design a new model, which would look at the rents for a longer period of time. So we've got a model sitting there, which we'll bring back to the table through the long-term plan exercise as well. And that takes into account renewals and maintenance and what levels the rent should be, operating costs. And the point raised before, we'll need to consider how we fund depreciation through that model going forward as well.
So the extra money that came in was serendipitous rather than planned. You know, we had a deficit and then we got some funding in that covered that off, and so that goes to my question about, and I don't know whether this is the venue, maybe someone could talk to me later about what is our policy in the older housing space. Is it a commitment we've got? Is it an area of business that we think we should be in? And that sort of thing, but maybe that's for another discussion.
Mayor Denny wants to answer that.
Well, I was going to do it when we speak to it, if you like, but do now. Okay, so look, we did a Section 17A review on elder housing and decided to keep it, but it was also a major topic of consultation in the 2021 LTP, if I recall, and there was strong support for it. The key problem we had was that we'd run into an ever increasing current account deficit, and that was a bit of a hole. And so we got out of that partly by increasing the rent. We hadn't increased it for a while, I believe. And then also the development of new units and the new funding, which is where this sort of one-off hit came. So I'm really pleased that we've now got a situation where we're making annual surpluses and we've dug our way out of the current account deficit. So it's in a pretty positive space, but it's also ring fenced, so you can't take money out of it, and we don't want to put money into it. But it's in a good space now, which was good because it wasn't a concerning space 5 or 6 years ago.
Thanks, James. That's really helpful.
The better off funding we got through Three Waters, Councillor Alvin, was used towards it to build the Kati, the brand new flats there. And I think it was around 4.6 million. So yeah, it was a big boost. Councillor.
Thank you, Madam Chair. I just have a relatively minor question. It's not to do with the numbers as such. It's more around the unit types. So I notice here that it's got 2-bedroom new units. So first question would be, how many of those types do we have? And then the second one, sort of, I guess just a little bit of an explanation as to why we would need that type of unit. Only because when I envision elder housing, I'm thinking of an elderly person by themselves or an elderly couple together, not so much needing 2 bedrooms, but maybe I'm wrong.
Through you, Madam Chair. So that was a new concept when we built the Heron Crescent unit. So we built 4 2-bedroom units. I was kind of thinking the same as you when we did that. But what it has allowed is, like, if potentially friends or siblings want to live there, or it does allow grandparents to have a grandchild to come and stay, things like that. So we've only got 4 of those and they're actually working really well.
Councillor Saul.
Yeah, a couple of things, I guess. One is actually alluding to that. I'm aware that there's some movement coming along and there's some issues about the situation of people that are renting flats, etc., and the effects that will be on their income as pension and their pension situation, or their ability to get either living alone or even the potential for the housing subsidy. So how up to date are we with that? I've not got all the info here, so sorry, I'm a bit, but I know there's something coming that's going to be a bit of a problem there. How are you guys aware of what's happening?
I'm not aware. Well, I'm not aware of that. Sorry, but I know currently it has no effect. If you're in a flatmate situation rather than cohabitating, then you still get the single pension.
Yeah, no, okay, there's potential changes there, so I'd suggest you be aware. The other question is, of course, the good old one that we always have about the new flats at Kari, the lifts.
I know.
Is there any plan yet? Is there whatever to actually accommodate those people that need to be able to get upstairs? Because I've still heard a few people that have said can't use them. I'm not saying that's what the applications are you're getting and that you can't fill them, because you are, but it's just one of those questions.
I'm still going down that avenue. I've tried everything, but to date, there's been no solution that we can find. We're actually looking at breezeways at the moment, but that could be pretty ugly. I feel that the tenancies have been managed well to date, and in fact, people have not chosen Heron Crescent because of that. It's, if anything, they don't. People who've chosen not to go to Heron Crescent has been because they don't like the complex feel rather than the little villages that we've got in other places.
Councillor Daly.
Yeah, I was just, it was in the news recently that this was changing, and it seems the direction is that the government is going to actually provide, instead of the maximum accommodation supplement rates are scheduled to increase by $10 to $30 per week from 1st of April 2027. So it's actually in our favour, this one, because this is how we offset our elder housing rents by, you know, when we actually increased our rentals, we encouraged or assisted our tenants to apply for the accommodation supplement rather than just having a fully subsidised rental from us. So this works in our favour. Maybe it maybe puts more money in the tenant's pocket, but they're actually increasing the IRRS subsidy and tightening the eligibility for social housing, which is something that we don't get involved in anyway, but by 25 to 30% of tenants' income. So in a way, it's leaning back more, swinging back more in our favour, where we always felt that we were disadvantaged by not being eligible for the IRRS scheme. IRRS.
Any changes in that space we can take into consideration when we're working through the LTP rent increases?
That takes effect on 1st of April next year.
Councillor Beach.
Thank you, Madam Chair. My query is more around the 85 units that you have previously or now at the moment. Obviously, how long you've had them for, I'm unsure of, but my question is more about the future of any planned elder housing, especially for the areas of significance.
Well, my dream for the future is that next we move on to TUI, but I'll bring that to you in another report. Now that I can show you that we're in a positive light, I'd really like to redevelop the units in TUI Place in Katikati, and actually the current wait list numbers support that. We've currently got 42 people on our waiting list. 13 of those are in Te Puke, 6 are in Waihi Beach, and 23 are in Katikati. It doesn't reflect true numbers, because Hilary finds that, she'll ring those people and go, if we get a spare unit come available, and they might say, well, I'm not ready yet, but I want to stay on the list because I might be ready in a little while, or you know, I don't want to be somewhere, and she's done that. She's had that with a couple of people in Waihi Beach. I think out that way they want to apply early, so Katikati definitely seems to be the place where we need the development, and I'll be bringing that to you separately.
Councillor Murray-Bench.
Madam Chair, whether we should be in elderly housing or not is a question for another day, but I just want to put it on record that since we ring-fenced the housing portfolio, and since you have taken it over, I think we can be very proud of the service that you are delivering on our behalf to the elderly pensioners in our area. So thank you, Kerry Little.
Before I go to Councillor Daly, had you finished what you wanted to talk about? Yeah, okay. Councillor Daly, last question.
Kerry, just on your answer to the TUI Place question or suggestion, are they, I mean, that's obviously a demand-based thing, but I mean, in terms of condition of the actual units, are they the worst off compared to the Te Puke units?
Yes, they are, and that's probably a little bit deliberate. Hilary's been, she refurbishes them as people move out, and we probably have been slower to do that until we, just in case you think it's a great idea to redevelop that site. So we've been keeping them to a good livable standard, but definitely not doing things like replacing kitchens if they don't need it and things like that at this point.
You're still doing minor improvements like improving accessibility.
Absolutely. Yeah, things we have to do. We've just replaced the roof on the carport thing out there because it was pretty rusty and horrible, and we've just done repairs on all the roofs because clearly we don't want them to be leaking, and yeah, they're still to an okay standard, but they're definitely the poor relation, probably, I think is what you could say.
Right. Thank you very much, Kerry. Thank you, Jonathan. Right. I already have a mover for accepting the Elder Housing Financial Report. Do I have a seconder? councillor Joyce. All those in favour, please say aye. Against? Carried. Right, we'll break for morning tea now. We'll be back at 11. Thank you very much. Okay, right. So Jonathan, again, monthly financial report. Take it away.
Yep, thank you. And through you, Madam Chair. So the financial report in front of you today is for the 11-month period to the 31st of May. At a very high level, it's a similar trend to the previous April monthly report. But just to hit on a few key numbers. So our revenue at 176 million is 4.5 million higher than the 171 million budget. Expenditure at 142 million is lower than the 147 per the budget. And our CapEx is 115 million against 121 was in the budget. Our capital program is looking like a landing position for the year of 131. So that's what was forecasted at the end of May against the original budget of 151 million. So while our structure plan program remains on track, there's some non-cash savings, as mentioned in previous months, of approximately 10 million sitting in that space. And we continue to talk to NZTA about the abilities of using some of that for other projects. Another key item in that capital space is our wastewater being 5.4 million over budget. And that's predominantly due to the Te Puke, or now known as Gordon Street Wastewater Treatment Plant. So that project as a whole is tracking as planned against its budget, but it's in earlier construction than was previously planned. So that's a timing consideration. Going forward, what we're looking to introduce into this report is to remove some of the accounting periods. So we'll be able to report against a whole of project concept rather than just the accounting period concept. So where we're talking here under and over budget, predominantly that's referring to the year-to-date budget or the 12-month ring fence budget, if you like. So when we've got our new technology and Pulse is talking to Datascape, then we'll be able to bring a clearer whole of project reporting to this report as well. Just moving through the revenue. So we mentioned that we're 4.8 million above. Subsidies and grants is 3.9 of that number. And a chunk of that relates to carry forward expenditure from last year to do with the Rimokoro roundabout. So it was expensed in this year, meaning we're able to claim subsidy in this year higher than what was budgeted. Also, as previously mentioned, our rating penalties are higher than what was budgeted for the period by 836,000. There's no further penalties achievable this year or required this year, but also noting that those penalties are typically remitted when those debts are written off. So while it's their revenue, they're not all necessarily collectible. Just touching on borrowings as the questions come. So our borrowings at May were 250 million. And that was against what we're forecasting at 278 at the end of the year. We have landed, now that we're past that year end 30 June period, at the 250 million. And at the end of May, we had a cost of funds at the time of 4.29, which averages over the full year at 4.12% against the
Councillor Maribin.
Jonathan, could I ask on page 28, in the transportation, we've talked about the Rangiora Business Park roading project is on track and 823,000 spent year to date. Contributions in this financial year is 1 million. Have you got any idea as to how the sites out there are selling and what contribution that is making to our budget?
So at this time, I don't have that in front of me in terms of the project update. I understand that there were 2 or 3 bigger lots that were getting close to being in that selling space. But as the development comes, then we will look to move closer to that 1 million spend. My understanding is we haven't spent all of that 1 million that we budgeted for this year to date. But perhaps we can bring that back to projects and monitoring and give a specific update in that form.
And on the Poripori Road, obviously NZTA have made a contribution to that. It's an emergency route between the 2 highways.
again, I can circle back around on that to projects and monitoring as to where the funding source has been for that.
Thank you.
So a couple of things. One is rates arrears number is up. And as you say, it may not be collectible. Is that because more people are in arrears, or what's the underlying cause of the rates arrears being up?
So are you, just to clarify, are you referring to the accounts receivable number that's sitting there?
I mean, you've already said we're likely to end up writing them off, but they're up on previous. So why are they up in the first place?
Okay, so that's penalties. So we don't budget to receive all of the penalties that we do receive. So we budget for penalty 1 and penalty 2s. We don't budget for penalty 3s.
This would be a time stamp, is it?
Which is time stamp, yes, it is. Yeah.
So, but the fact that the penalties are up, does that reflect people paying more slowly? Or is it just better collection? I mean, what's actually causing that? Because you say the penalties are up, but then we probably won't get the money. So I'm not quite sure what the underlying factors are there.
Yeah, correct. So it's a mixture of as you say, people who pay late may miss it by 1 or 2 weeks, and then we do get some of those penalties in. Some of the longer penalties, which is in our P3 category. So those are for ones which are 12 months or longer.
Sure.
And to do a full analysis, we can certainly bring that back to show what those P3 penalties are.
I'm actually more interested in the P1, P2s that we're going to get. My question is more, are more people late with their rates at the moment? I mean, times are tough. Is that reflecting in that?
We have seen that, where we typically, what we typically do as part of a process is not to put penalties straight on. So we will go and put on payment plans. If someone's on a payment plan, either a fortnightly or a monthly, whatever best works for them, we try and calculate those payment plans so they're fully paid by 30 June. So our next lot of reporting will give us a lot more accurate as to who's stuck with those payment plans and got to that 30 June position where all their rates are fully paid. If they drop those payment plans off, that's when penalties would get reapplied back to their accounts.
Now, I see the accounts show a potential $48 million surplus in the year, but there's a lot of non-cash, and if we do work earlier, it gets smaller. If we do work later, it gets larger. So as I understand it, the best way to really understand whether the ratepayer is getting benefit is the general rate reserve. Do we have a forecast for the general rate reserve for the end of the year? Because it has been hammered in the last few years because of the building downturn.
So the process we're working through at the moment is to finalise our year-end position. So that's a slightly longer process this year with moving over to Datascope. So our accruals, so our June invoices are being now recorded in Datascope in the new system. Once we've recorded those, we bring them back across to the old system, record that in. Once we're through that process, we'll be able to work through our funding. As indicated before, we're still looking at a small increase to the reserve, so a positive surplus.
But as we say, it's been hammered the last few years, isn't it? Because we've had to use that to prop up the regulatory team during the building downturn. So yeah, we're not.
Correct, it has it.
While you talk about Datascope, and I was just frantically looking to see if we talk about anywhere else in here, how is that major project coming along?
Yep, so we went live on about the 4th of July, so as planned. So we gave ourselves the weekend to make sure everything was as correct as it could be. It's been a really good go live. Our project manager, who's done quite a few of these projects, she thinks it's one of the best that she's had in terms of a go live space. It's definitely taken a lot of finance and our BA IT team resource to help the business work through the training cycles. But I think the trainings we've done across the staff, as well as the resources that are on, have certainly helped us flesh out the challenges that we have seen, and there's been nothing major that have resulted in us stopping the system and going back to scratch. So it's been a pretty positive.
And this question is coming because I keep asking it, but when will the rates calculator be available for consumers to go onto the website and do? And again, I always say with this, it's better, it's more important that it's right than it's rushed, right? So any idea when you might get to that point?
Yeah, so our initial target was to have that available mid-July. Different challenges through the go live process of Datascope has probably extended that. We are hoping to have that So the rates assessment reconciliation is the piece we're currently working on. We hope to have that completed by the end of this week. Then we'll put some double checks in place and do some sample testing to make sure it is 100% accurate. So it's targeting within the next 10 to 15 days, we'll have that up online.
Well, thank you.
And just to follow on from that one, the amount that we need to be 100% accurate about is very, very small. The actual transition from rates, which is hugely complex in the back end of the system, we're in a very, very small number, and it's less to do with data migration and more to do with how the data was originally set up in the old system and making sure the legal compliance gets across and parceled correctly. So it is just a technical side on that.
As well as my favourite thing, the rates calculator online. I guess that also affects people paying monthly rates as well, because you can't adjust those until you know what to adjust those to meet them for the new year.
Yeah, that would be correct.
That's correct.
More and more people are paying their rates monthly.
Correct. Yes.
Ron.
Thanks for that. Mike, one of the biggest frustrations of people developing a budget is what assumptions go into it. And I'm looking at the depreciation amortization line there on page 36. Which always seems to me to be the easiest thing to predict, because you assume starting valuations and so on. But so that's a particular, but throughout your whole budgeting process, now you're reaching the end of the year, where were your assumptions so far out that you thought, how do we make that, how did that come to happen? And are we sort of in a better position going forward?
Yes, so the process, particularly on assets, because it starts very early on, we're taking the best and latest information previously. So we'll take the last annual report that was signed off by audit. So as we work through our long-term plan now, our opening position is based on 2025's annual report. And then we're using the system to calculate and work through what those assumptions are for the year based on annual plan 27. Then those will be our opening positions for 1st of July 27 as the start of the long-term plan. So where our assumptions can be out from actuals is because we've got a 12-month lag or cycle, if you like, where we're using the planning model to bring us up to the opening balances rather than being able to take the closing balances of the closest year end.
So you're telling me you've got a structural inaccuracy in your budgeting process?
So no, yeah, what I'm saying is because we need to use the signed off audited numbers. So we use those from the previous financial year. Then to calculate the assumption of our opening balances, we're using a model to get to that position rather than being able to use actuals throughout those period because of the timeframes we need to build up the assumptions in the planning cycle.
I think maybe if I could just jump in there as well. Particularly with depreciation, the estimates made prior to any valuations being received. So the team have to make an assessment of what they think the valuation adjustment may be. And correct me if I'm wrong, Jonathan, but if we just think last year, just in the water space was about 15 or 18% increase in the value of the assets. If the team had made an assumption of the long run was 5 or 6, that's going to have a big effect on your depreciation assumption.
And through the chair, if I could just add to that as well, the timing of some of your big growth projects that are coming through across time as well, where that's going to be from a project delivery standpoint has to be an assumed part of the equation as well, which will give step changes up or down just as to whether we delivered or not. So that would be another factor that impacts that outcome.
So over time, have you been roughly out by about the same amount over many years?
Sorry, I'm not understanding that question.
So over time, is there a pattern of how far out you've been in your budgeting?
Not across time, because there is a constant recalibrating of that every single annual planning period. But compared to LTP, for example, yes, you would expect to see a gradual step change of inaccuracy. But the risk mitigant is that we revisit that every single year and bring it back to a more realistic basis.
Jonathan, did you want to carry on a little bit longer? We've got a few more questions, but.
Yeah, happy for more questions.
Okay,
Yep.
Councillor Alvin.
Yeah, just as a comment, it continues to be quite difficult from this side of the fence to get that assessment between unders of budget, which are just timing issues and genuine under budgets. That's a real nightmare. And when you look at a report which says 70% of your reporting is in red, that's kind of makes it quite difficult. And I don't know what the answer to that is, but we do need to. We had the conversation last time, I think, Rodney, about the traditional colours, but I see red doesn't really help that much when a lot of them are just it's just timing. The one question a couple of questions I did have, there's a comment in there about staff costs being 441 under budget due to the use of consultants. You started to sound like central government politicians with that. Have we got a net there in terms of what those costs are? If we're 441 under direct employment costs because of the use of consultants and we spent 750 on consultants, that's not a good look. If we're 440 under and we spent 150 on consultants, then it's just getting that picture there that I'm interested in, and it's a bit hard to read that.
Yeah. So just to answer the personnel one, so what we've asked Darren, who's our head of our people team, to do is to come back with some specific headcount numbers. So we'll split that out by salaried people, by temp people, and by consultants, where they're internal consultants as opposed to downer type consultants, if you like. Yeah. And then we can put some numbers and wrap around that to provide further clarity.
Yeah, because on the face of that's good. On the face of it, that's a good result. Till you look on the other place, and something like and I understand a lot of these things, but look at the parks renewals projects is 386 under budget, and I'm interested in, is that a budget which is put your finger in the air and think what we're going to spend, or is that once again not getting to it sort of jobs? And I mean, there's some budgets you're going to have to cater for, which is, well, look, we might have to cater for this, and they haven't arisen, and the timing issues again, and that parks renewal one's just one thing that I've got a particular interest in at the moment.
Yeah, so we can certainly come back in terms of the details of the parks and renewals, but as the budget's set, it is set by specific projects, and projects make up that fuller budget. But we can definitely come back, and to your earlier point as well, is in future reports when we can align Pulse with Datascape, we'll be able to provide a whole of project position as well as what's happening in the current accounting periods.
And it might be possible just to have a drop down there. Some people may be more interested in this than others, and it's really easy to have a financial report that goes to 500 pages and no one wants it. It's about getting that balance between high level picture at one stage and then ability to drop down and have a closer look somewhere else. I think that's kind of being the key, so you don't have to spend half your meeting answering questions from people who don't know what they're talking about, like me.
Just to touch on as well, I agree there is a lot of red in that report, so we can certainly change that. We did get some feedback from elected members to specify a bit more around the legend that was there to help understand what the colours meant. Typically, if it's red, it's outside of the variance range, either positive or negative, but typically red means it's a bad variance, if you like. But we can certainly look at that colour combination.
Councillor Murray-Benge.
This is a way out question, but as senior financial managers, do you ensure that the small contractors that are employed through this council are paid on time regularly?
So all of our suppliers have terms which are locked in place in our financial systems. So our new system will allow us to do more detailed reporting. But no, definitely our target is to pay people on time, if not early. Yes.
It's just that I've had a criticism from someone who's a small business owner saying we're always slow to pay. And I just wondered if that is the case, or was it just gossip?
So typically our 20th of the month, which a lot of our suppliers are on, we would pay them on the Thursday before the 20th of the month. That's been our typical cycle.
Matt?
To you, Chair, just to pick up on Councillor Evans' and comment, I think an action I've just picked up to come back with for year-end position when they come back is we'll actually show you the full salary budget versus what we've spent in the variance and come back with the consultants' numbers. You can see that whole picture to hopefully we're on the right side of it. It shows that efficiency. Also, totally accept the comment around sometimes when we say we're under budget in the year, and we've talked about trying to get that alignment between P&M and audit and risk and the finance stuff. So it's something now that Pulse is up and running, we're hoping to be able to do that through the next financial year for you.
In response, Beth, yeah, I noted in the minutes we had talked about having some comparison there, so we're able to look at it project by project, which will be really a lot more helpful from an oversight perspective. And you're not always saying, where the hell's that one at? And we're constantly deferring to another year, and it's understood why that happens, but it's just trying to reduce the amount of noise around the table, really.
Councillor Daly.
Just wanted to really explore a bit further the use of consultants and you know, not wanting to suggest that Matt's put that to bed, but the department by department use of consultants, is that, I don't know, I guess what I'm asking for is maybe is it possible to have a more detailed look at consultants in general and department by department? I see regulatory personnel costs are under budget by 544, offset by increase spend by 776. Is it just down to, is there a conscious effort to reduce FTEs at the moment, as has been suggested as a strategy leading in up to Three Waters transitioning? Is there a lack of, you know, the skilled personnel in the full-time equivalent workforce? I don't know, just maybe an overall look at the use of consultants and why we use them, where we use them, and what effect that has on the whole organisation, I guess. I don't know, just as a one-off individual sort of project.
Yeah,
and I guess it could be incorporated into the report on a regular basis too.
Talk to regulatory in a minute, but if I just take a quick example of what we've done through the ERP project. So instead of trying to hire 5, 6, 7 people to join the team for a short period of time, that's when we'll use consultants to come in, and they might be here for 5 or 6 weeks, gone, then we might get them again at the end of the project for another 5 or 6 weeks. So that type of consultant expend where there's not really an FTE that we could or should be replacing it for. So that's relatively common across council as well, where we'll bring in that specialised resource when we need it. So, but maybe the numbers that we bring through that Matt's just mentioned will help highlight where those FTEs versus that consultant spend clarifies a bit more. But if we let Alison touch on the regulatory side.
I think it's sort of come up at community board level, and I know it's a very low level example, but just getting community boards looking at whether we proceed with a roading project, and we're told that we need to do a safety audit, and then we are told that we need to employ a consultant to provide that, when you think that with so many highly qualified personnel on staff that would be possible to deliver from within the ranks. But so I don't know, it's just a very low level example, but I'm sure there's much higher level and much higher cost examples that maybe fly under the radar.
Yeah, and I'm sure there's lots of specific examples, but if we take that one, for instance, it could have been that there wasn't availability of those specialist staff at the time, and we were wanting to speed up a project, then we'd bring consultants in earlier to help those timelines.
Councillor Murray-Benge, and then we'll let you carry on.
Page 33, CCTV, we're under budget by about 137,000. Could I ask that a report goes to projects and property so we know where we are with our CCTV cameras? We don't know if the one's up working in Pier Street nor the one in Pori Pori. And so we're under budget, and Te Puke is complaining. And I think if we could have that, would be worthwhile, sir, if you could ensure.
Certainly we can bring that forward to projects and monitoring.
Thank you.
Alison.
Yes, sorry, we'll loop back round to Councillor Daly's question around regulatory contractors or consultants, as the case may be. So we are probably in a unique situation in terms of we have got some statutory timeframes around delivering consents, and we also have inconsistency around volumes. So from a logistical point of view, if we had staff on hand to be able to do that, it would be peaks and troughs. We would be holding staff at the point where we might not have consents coming in. So it is a conscious business decision that we have to employ contractors or consultants in that space to deal with the consenting volumes, peaks and troughs. And we also have specialist contractors that come in where we do not have sufficient expertise in-house. So they can be for the specific sort of like ecological assessments. That is not reasonable for us to employ a full-time equivalent staff member based again around those volumes that we might have come through and when that work will come across council. So that's. Hope that answers your question around that particular use of consultants and contractors.
I think the purpose of this committee is to make sure that we are comfortable with these sort of issues and to know that our staff are working in the ratepayers' best interest, I guess, if I can respond to that. And that was a great answer. Thanks.
Carry on, Jonathan. And just when you ask a question, could you just name the page number that you're looking at as well, please, for everyone so they can follow your question?
Just moving towards the end of the report, then looking at the debt position, the cost of funds and facilities. So we've obviously had a large discussion this morning with Bancorp, but just to round that out, I guess. So our total borrowings at the end of May were 250 million. They were actually that again at the 30 June position as well. So we've retained that at 250. Our annual plan assumption was 4.16 for a cost of funds. At the time of 31 May, we were 4.29 on the debt outstanding at that point, but the average over the full year was 4.12%. So just under that planned assumption in that case. If there's any questions, more questions in that treasury space, happy to take them, but we may have covered those earlier today.
Councillor Murray-Bench.
On page 34, could I ask please about the Prole Road development? We opened that just recently, but I think it's financially something's not quite right. It's 35. "130 Prole Road wetland projects has experienced delays due to design development, and yet we've opened it."
So I'll come back to you in full detail on it. However, just reminding that this is a 31 May position, so it may have opened in the last couple of months since these accounts were drawn up and drafted.
Is that you done?
Yes, thank you.
For this particular session? Yep, thank you. Okay. Thank you very much. Can I have a mover and a seconder, please, to accept the monthly financial report? Councillor Alvin, Councillor Sol, all those in favour, please say aye. Aye. Against? Carried. Thank you. Okay, Jonathan. welcome back. Um, so yeah, just presenting the audit report, please.
Yes, so this audit report is the 2025 audit report to management from Audit New Zealand. So firstly, this report was completed with Audit New Zealand in March, and my apologies for its lateness coming to this committee. So the report identifies a range of medium and low priority opportunities to strengthen financial positions. A lot of the activities in this report now have been completed or are in a state of being looked at and resolved. We have used these as part of our planning requirements with Audit New Zealand for the 2026 year end, which we're working through with Audit New Zealand at the moment. I do just want to touch on one matter, which is probably one of the key ones in there. So the reference to NZT overpayment, this has previously been reported to Council as part of the governance report that Audit New Zealand provided directly. And just wanting to highlight that staff don't consider this an overpayment as such. So Council received an invoice from NZTA that was confirmed by an engineer through our normal process. Checks and balances were all completed on that, and that invoice was paid. Subsequent to that, there were a lot of issues presented with multiple challenges through the NZTA process, and that resulted in credit notes being issued by NZTA, and the timeframe taken to reconcile between Council and NZTA resulted in this issue that Audit have raised. So there's certainly some improvements that we've discussed with NZTA themselves on how we can improve the process, as well as putting some steps in place inside of Council to ensure that it doesn't get dragged out this long in the future, and that we've got steps in place to make sure reconciliations of this nature are a lot quicker. I'm happy to take any questions on the report.
I have one, Jonathan, just on the sensitive expenditure approvals. So the policy there would be, just so we all understand this, so the CE has to get his expenditure signed off by the Mayor, correct?
Correct.
And the Mayor has to get his approvals through the CE and the ARF Chair?
Yes, I think it's CE and another elected member, which normally we use the ARF Chair. Yep.
Okay.
And just to touch on the comment that's in there as well. So the issue raised by Audit was valid at the time. They didn't have all the evidence that they're required to tick that off.
You know, it says
So it
that
was-
so the policy, is there a policy that we could have?
Yes, there is a sensitive expenditure policy, and we can certainly send that around.
Yeah, that'd be great. Thank you.
Just on that, so was the issue that Audit weren't given the evidence, but the evidence did exist, or was it?
Correct.
Yeah, okay.
That is correct.
Great, thank you.
Do we have any other questions? No? Right, okay, so can I have a mover and a seconder, please, to accept the audit report? Councillor Murray-Benge, Councillor Beach, all those in favour, please say aye. Against? Carried. Okay, review of accounting policy.
So this is just the purpose of the report is to provide an early look and a high-level summary of the key changes to Council's accounting policies for the year end 30 June 2026, which we're working through at the moment. The key change and really only change in the accounting policies at this stage is an update to the 3 water reform note. And it's likely that this note will change again as we work through the audit office on what that will look like before we sign. So we'll be ensuring that Audit New Zealand, the audit officers they know and now are happy, as well as that we line up nicely with what TCC is putting in their annual report too.
Councillor Joyce.
Possibly the biggest accounting change coming up is depreciation. Would that be right? So what, obviously this is looking at the financial year just gone. So, but when will we be looking at future implications of, depreciation change as referred to earlier in the meeting?
So from an accounting policy perspective, there's no change to depreciation. What we need to work through in the long-term plan is whether council chooses to fund some of that depreciation. So in terms of it going through our normal SOCRA P&L statements, we definitely will show depreciation and record it. It's just the funding of that, which is whether we're effectively rating for that expenditure.
So I know that for waters assets, there's a requirement, but not of us now. It's a requirement of what will be a requirement of the new water services company. So is there any requirement on us for other parts? Because I know there's different accounting treatments possible. Yeah, it's not like we've been naughty. It's just that we've taken a different accounting treatment, or a different funding treatment, depending on how you want to look at it. So is there any requirement on us to change what we're doing in the future?
So there's no requirement as such. So it's a council decision whether it chooses to fund depreciation. The way that this council has done it is to fund in-year renewals instead of funding the depreciation, which builds it up. So we do fund some. So we fund depreciation on vehicles, for instance, computer equipment, and library books, but not the big major assets like waters, as you've mentioned.
So at the stage we're funding short-term assets, but not long-term assets then?
There are some longer term assets in there. So we fund some of Tech Park and some of Rec and Open Space, but we need to be a bit more consistent and have that discussion through the long-term plan to see what we want to do going forward.
Yeah.
Through the chair, there's some current legislation that's been floated in relation to rates capping. If that passes through in its current format, it explicitly mandates that you must fund depreciation through rates in year or whatever other funding sources. But that, as yet, the timeline for that coming through hasn't shown up, and it may well be after we adopt a long-term plan.
Councillor Murray-Bench.
Could I just ask Matt, are we making submissions to that rates legislation?
Through the chair, Deputy Mayor, at this stage, they haven't been asking for submissions. In December last year, myself and then CEO Miriam Terrace met with DIA and gave them some very robust feedback on some of the challenges that came with the rates capping and some of the implications that might come with. We've never got any further feedback on that. So I suspect once the rates capping does get enacted and we have the opportunity to comment, it's highly likely His Worship and myself will go and lobby at subcommittee level and select committee.
I think it's really an important issue. Maybe some local authorities are a bit incompetent, but we do know that Parliament passes legislation that sometimes is dodgy in the interests of the wider community. And so I think it's something we should really nail down, that it's working, that will work in the interest of those local authorities that are responsible. And so I'm very concerned, Madam Chair, that when we make decisions around this table, we make them in the best interests of the wider community, and are really, to be blunt, sick of central government without consulting with us, coming in with legislation that doesn't work in the interests of the wider community often enough.
Thank you, Madam Chair. Just point of clarification, for this report specifically, this is just to do with the accounting and the accounting standards. So this report notes there is nothing changing in that space for reporting purposes. The conversation about funding, which is the flow and where this has gone, the workshop that's coming up this afternoon will float that question for council to grapple with and to give some guidance as to where officers might be able to support that conversation going forward. So very timely, but to do with this report, nothing is changing for the depreciation space. Thank you.
Councillor Alvin.
And I guess it might be a bit early, but in terms of the HICANE application we're getting with Early Start, we probably need to be looking over the next period of time about aligning some of those policies with our future, some of these accounting type policies. No doubt you've got that under control, but there are some inconsistencies there that probably the sooner we get on to getting some consistent approach to that, the easier it might be, I guess.
Totally agree, Councillor Relvin. Assuming we get through those hurdles through to September and we start on that journey, I think we highlighted yesterday the intention will be to see how quickly we can start zipping things up, as Gareth mentioned.
Carry on, Jonathan. Anything else? Radio. Okay, so can I have a mover and a seconder, please, to accept the review of accounting policies? Councillor Joyce, Mayor Junior, all those in favour, please say aye. Against? Carried. Right. Oh, we're going to have a change of scene. Lizzie McEwen, come up.
Good morning, thank you. This report provides for you today appropriate data on Lagoima requests and privacy breach information. Sorry, yes, yeah, there we go. Okay, and this report seeks to endorse more regular reporting to you via Stella Library and the council website rather than through this forum or this committee. The information in this report is pretty basic, pretty straightforward, so I'll take it as read and I'm happy to answer any questions if you have any.
Questions? No? Thank you, Lizzie. Oh,
sorry, Jonathan.
Jonathan nearly got away with it.
Yeah. What in Lizzie? So I've been trying to find exactly these Lagoima requests, and I didn't try the council website because I thought there was a folder in Stella. Where would I find that?
Not yet. So until after this, until after you approve for this to go that way, then it'll be up on Stella for you. But at the moment, there's nothing on Stella, but we will put it on Stella and the website. Okay. Yeah.
Mainly because I just need to follow some up that I've been asked about.
Okay.
But have no information about them. Thank you.
All right, nice.
All right, any other questions? No, Councillor Joyce.
But you say them on the website. I'm on the website. I can't find them. There's a Lagoima page, official information requests, but the actual information is not there.
No, so this information that's provided to you on a quarterly basis will be on our website instead on a monthly basis.
Right. My point is, but are we publishing our responses to individual Lagoima requests to the wider public? Because that would be the truly open government thing to do.
Yep, and we can do that. We can. We do have a policy that allows us to publish responses. We would obviously redact the requester's name and personal information from that.
Redaction.
Yeah.
But can I suggest we do that?
Yep.
I don't know quite the best way to do that, whether it needs a motion or an issues and options paper. But other public organisations publish Lagoima information on their website. So I'm surprised to learn that we're actually behind on that.
Councillor Sowell.
Yeah, I went through this report and I've got so many dots there. I could probably keep you all busy all day. But there are just one or two things perhaps, and that was one of the things was about what was going to go up and when it's going to happen, and how we make sure people are aware of that. But there are things in here that concern me as to where they've perhaps either generated from. One, for instance, would be, just one thing as a correction. One of them here is Katikati Museum. Sorry, it's Western Bay Museum. Just being very pedantic, but that is what it is. The Katikati Community Centre Charitable Trust audit.
Yep.
What's that to do with us? They're a separate entity.
Yeah, exactly. Yeah. So they would have sent a request for information to do with the charitable trust's financials that we may or may not hold. So we may or may not have had that information for them, but we would have received that as a Lagoima request.
So that's where it's important what Rodney's saying about the information being there as well, because I just looked at that and thought, wow. Relatively, I think, as I say, I've got a zillion there, but let's not take everybody's time up on that. It's in the report and let's start. Yeah. Thank you.
Councillor Daly.
Look, in light of Tanya Tapsell on Mike Hosking's show this morning about the art portfolios that councils hold, Are you able to give us a potted response on the actual response to this question, presumably made by the Taxpayers Union?
Yeah, I don't have that to hand, unfortunately, but I can upload these responses in redacted form. So like I said, to remove the details of the requester and upload those to our website so you can see it on the, so you can see what information was provided, if any.
I think it was I'm not, this is not really a question now, but it was just the fact that a lot of councils around the country hold significant artworks of significant value in some cases. I wasn't aware that Rotorua holds quite a few Goldie original artwork, and the potential for these to be recycled and put into other council services or delivery to reduce the cost to the ratepayer.
Matthew, are you going to tell us about our art collection?
Or lack of, Madam Chair. So that particular question is an annual question that the Taxpayers Union ask, and for 15 years I've seen it every single year. As far as I'm aware, Western Bay doesn't hold any art collection of any sort or any value.
Yeah, I thought that was reasonably evident. Councillor Murray-Benge.
However, if any councillor wishes to donate a special piece of artwork, I'm sure, Matthew, you'd be delighted. Could I just include in the report to come with CCTV, I noticed Te Puke, Tanners Point, Kadikadi are there. I'd like to know more, and if that could be included in any report that comes that Jonathan's working with as well. Thank you.
If there are no more questions, beg your pardon, yeah, Delia.
If it is indeed council's wish to publish Lagoima responses, I'm not necessarily against that, but do we have to redact who's asking? Because that's often quite useful to know.
Yeah, it's the Ombudsman guidelines to redact the information of the requester to protect them from their privacy. People are, they have the right to ask for this information, but we don't have the right to publish their personal information.
Okay, thank you.
Oh, sorry, Councillor Song.
I think when you get down to the art one, there's quite a few factors to it. There's outdoor art as well. Who owns and who maintains and who looks after that? How is that worked with? And we have monuments of all types out there. So where this fits within that policy, which I listened to that interview on the radio this morning as well. And the other point that was made was, in fact, that Rotorua were holding private pieces of art, and then they were having to insure them, etc. So it was quite an interesting and involved situation, because some of those Goldies were privately owned and it was inflating their insurance issues. I don't think that will be a problem for us, because Western Bay don't have a place suitable to even store those art. So, but it's something, again, we need to be aware of. And if we do have things that should be on display, how we're going about making them available.
We'll hear from our work of art over here, Councillor Alvin.
Yes, I was going to suggest when you respond to the Taxpayers Union that the notes I make regularly for these meetings, I consider to be quite artistic and may well be of some considerable value into the future. And I wouldn't want you to leave that out of the Lagoima request as well.
Quite colourful as well. Councillor Joyce.
Bearing in mind Councillor Alvin's last comment, can we ensure performance art?
Oh, now I'm not feeling very well. Right. So if there are no more questions, can I please have a mover and a seconder for accepting Lagoima and privacy statistics? Councillor Sol, Councillor Joyce. Oh, pardon? Oh, sorry, the recommendations are that the Executive Assistant and Privacy Official Information Advisor report dated 28th July 2026, titled Lagoima and Privacy Stats, be received, and part 2, that Lagoima and Privacy Statistics reports are provided via Stella Library and Council's website only. Okay, so got your movers and seconder? Hang on a sec. So we have a mover? Okay, right. Yep. Okay, so yes, we can have speakers. Did Councillor Joyce, did you want to speak? Okay, right. Councillor Sol, just checking, seeing as you're second. Go ahead.
Thank you, Madam Chair. I think this is a really important report that you've given us today, and I think it has answers and challenges in it for us, and I hope that we follow through on them and report back to us as to where we can improve and what the issues are that we're not doing. And so it's really important. So thank you very much.
Do we have any other speakers? Councillor Dinsdale.
Thank you, Lizzie. One of the things I am concerned about, one of the service requests received and the response is around the request from Tapwika Iwi, and that they were wanting, obviously, clearly a response in regards to resource consent applications. So will that be posted? Will we receive a report before, or have you responded to Tapwika?
So the responses won't be provided on Stella Library before the requester gets them. We obviously have to stick to those, the 20 working day timeframe that we're given by legislation. So by providing the responses on Stella before they go to requester would significantly slow the process, which I think would be unfair to the requester. So we would send the response to the requester and then add a copy of that sent request to the Stella Library report on a monthly basis. Yeah.
Councillor Daly, is this isn't a question?
Well, it was going to be a comment.
No, we're not taking questions anymore.
So I'm just speaking to the recommendation, and I just want to make the comment in my comment in my support for the recommendation that on page 90 we talk about the number of Lagoima requests that we receive. And we've responded to them in a timely manner in general, but we have talked about in the past about whether we should be charging for the cost to process Lagoima requests, and I think we've been very magnanimous in not charging for any of these Lagoima requests, but I know we have given direction that maybe it's time that for serial Lagoima requesters that maybe a charge might be appropriate if they're becoming malicious requests, or if the quantity and nature of the requests is maybe taking up excessive staff time to process.
Okay, right. There's no more speakers.
Just response to Councillor Daly, really. I think we already have that in place. I think what I particularly welcome in that is that we haven't actually used it this time around. We have used it in the past. We have charged people for Lagoima requests. And I was particularly concerned when we weren't getting a proper flow of information about our housing operations, that a community group in the Mokoroa was putting in a series of requests, and then they wanted to get charged, and it was a serious policy issue. So I'm actually quite welcoming the fact that we seem to have eased off on charging people through recent changes in management at the council, shall we say. But the provision is there. I would like to be clear that for the next meeting, if we can put it on a motion, but I don't think we need to, that I'd like to have a structure for reporting outcomes. I mean, there are a lot here, but we should be able to drop them to the public. I agree, it's got to go to the person who asks first. I mean, as an ex-journalist, there's nothing worse than asking a question and then having the organisation blast out the response to try and knock your exclusive off. So, it's only right that it goes back to those people, but can we please have an issues and options paper? For example, I get it, individuals should not be named, but groups like the Taxpayers Union, there's no privacy issue there. So a proper sort of paper on what the options are, what the implications cost-wise might be, and how best to do it would be very welcome. Thank you.
Did you want to respond, Lizzie?
Yeah, just circling back on the charging aspect for Lagoima, there are multiple steps before we'd get to that final resort of charging for information. we have to bear in mind that the information held by council is or should be publicly available unless there is good grounds for withholding it. So if someone is perhaps asking for a lot of information where we may have grounds for charging, we would ask them first to refine the scope of their request to be able to avoid charging them for that information.
If there's no further speakers, we've already got a mover and a seconder. All those in favour, please say aye. Against? Carried. Thank you, Lizzie. Next up, business continuity update from Simon. Welcome, Simon.
Good morning, Chair, councillors. My paper, reasonably short, just mainly for the committee's information in terms of what we're proposing to go ahead with before the end of this calendar year with regards to our development of our business continuity plans. Suffice to say that of the options that we've considered, we've chosen the one that, bearing in mind the uncertainties with Head Start, would provide us with a cost-effective method of addressing our immediate need for the development of business continuity plans. And with that in mind, I propose to take the paper as read and welcome any comments, questions and suggestions.
Right, any questions? Jolly good, thank you. Okay, so can I have a mover and a seconder, please, to accept the plan, the paper on business continuity update? Councillor Joyce, Councillor Beach. I have to look this. Oh, Councillor, sorry, I'll give it to Councillor Dinsdale this time. Okay, all those in favour, please say aye. Against? Carried. Right, internal audit program, please, Simon.
Thank you, Chair. The paper is again primarily for committee's information. Just in terms of the content, we've completed the initial, more of a pilot run, if you like, internal audit review of Council's treasury function, which has already been, I think, extensively discussed this morning. That's there for Council's information and comments and questions and so forth. On pages 104 and 105 of the agenda is the initial scoping for the 3 reviews that we will be commencing next month. The wording of the scoping that we've provided on those 2 pages are that's in line with the initial proposal that we had put forward before the committee at its previous meetings. In terms of the asset management maturity assessment, we'll be commencing that with a scoping meeting with the internal audit team in about 2 weeks' time. Already we've slightly changed the scope in terms of not restricting that to a climate alignment issue, but rather asset management maturity on a wider scale. The emergency response and preparedness, we'll be having an initial scoping meeting with the internal audit team in about 3 weeks' time, and I believe that the scoping for that exercise will be changed fairly substantially. We'll be nutting it out with the internal audit team, which will include the Bay of Plenty regional emergency management coordinator to help us out with the review on that, to make it much more fit for our purpose. And the legislative compliance self-assessment, we'll be having an initial scoping meeting with the General Manager of Regulatory and our internal audit team next week. So with that in mind, I'll take the report as being read and welcome any comments, questions and suggestions.
Councillor Daly.
We just got forwarded a report via email yesterday, and I only read it late last night, but I thought it was quite interesting in terms of the Vero report on climate resilience. Yeah, Sorry, I'll just, so my question really is, I think it was quite good in that it strongly support climate adaptation planning and encourage realistic expectations about insurance outcomes, continued collaboration between councils, communities and insurers, particularly around data sharing, sequencing of decisions and clear communication will lead to better outcomes for all parties. So I think my question really is.
What page are you on, Councillor Daly?
This is the Bureau report, sorry.
Not yet.
Are we talking about that separately? Okay, no.
Sorry, if I may, this is a completely separate report that I emailed to all councillors that I'd received and was asked to share. So it's nothing to do with this report, but I think it's of tangential interest possibly.
Yeah, okay.
Yeah, it's.
Yeah.
Yeah.
It is.
Yeah. Thank you. I mean, I raise it because we've got the issue in Muir Place in Te Puke where we've got the residents with water lapping at their back doors as the Ohini Anga stream rises in heavy rainfall events, and council's response to that, which I think is very commendable from our stormwater team, looking at possible mitigations or solutions. So I think my question is really around the recent IPCC or reduction in the maximum scenarios and bringing them back to a more reasonable expected outcome rather than what ifs. So our hazard mapping and coastal inundation and flood risk maps are based on the IPCC 8.5 scenario. And are we getting any indication since that big announcement a few months ago that regional council is going to relax the requirement to do our flood modelling to the highest standard, or is there been any indication of pulling back on that, because it does have an impact on people's insurability for their properties and the sort of actions that our council take to either mitigate or put in place policies that are beneficial to our ratepayers?
Well, I don't believe I'm in a position to answer that question directly, but we will certainly be taking issues like that well into account when we finalise the scope of this review. And it sounds to me as if these sorts of issues would be relevant to the review that we're looking to scope when we have the meeting with Brad, and our internal audit team in about 2 to 3 weeks' time.
It's RCP 8.5 is what he's talking about, the IPCC modelling. And yes, we would appreciate something coming back to council, because we would like to see what our approach will be going forward, because it has come out that from the government, directly from the government, that we shouldn't be using the most extreme modelling outcome. So yes, that would be great, Simon, if we could have some more information on where we go with that one. Thank you.
And can I just, a question you might be able to answer, asset management maturity assessment, could you give a bit more of a layman's definition of what that means?
Well, it can be fairly wide ranging in terms of the various standards that we're adhering to. For example, it's mentioned in the paper that the Institute of Public Works Engineering Australasia have issued a number of guidelines in this space. So we'll be looking at that as an example of whether we're meeting those standards in terms of how we go about managing our assets and so forth. So, I mean, like I say, the scoping for this particular exercise is in a ever so slight state of flux at the moment, but certainly the comments and suggestions are more than welcome before we finalise the scope, before the review takes place. I would imagine in terms of the timing that we would be looking to provide a report to this committee before the end of this year on this particular matter.
I think I'm asking because I think, is it about the actual assets resilient to climate or hazard risk, or is it about the life cycle of the asset and how it's sort of more susceptible to failure under extreme conditions?
Well, in terms of how it's written on page 104, there is a inherent scope limitation to what what we had initially proposed. From my discussions with Brad over the last week or two, we're not looking to limit it to that necessarily, but asset management on a slightly wider scale. So all of the points that you've just mentioned, I presume will be to some extent included within the scope of this review.
Aaron will just add to that.
Just a brief attempt at your layman's term version. So asset management maturity is more along the lines of we are required by legislation to produce an asset management plan. It is to what level and how many standards and best practices we build that plan to. So a gold-plated version might adhere to all the standards and come with quite a considerable cost to develop and maintain versus what is a fit for purpose for this area for those assets. And there is a scale between immature to a maturity, and that's the assessment that this work will look to do. And a lot of that I've seen driven through NZTA requirements around their investment and what they're going to provide can often be linked to what level of maturity you are planning at.
Councillor Joyce.
On page 116, it suggests that our bank reconciliations are not performed in a timely fashion. That seems quite a basic requirement of anybody running a cash book. So I would have thought that a large organisation like this would be reconciling at least daily. So could we just get some reassurance that we are reconciling our bank information on a daily basis or more frequently if appropriate?
You're absolutely right. It's a financial control that needs to be the number one control, if not anything. So yes, we do reconcile them daily. At the time of the report was being run, we had our key bank reconciler away on paternity leave and didn't have sufficient backup to keep up to date as regularly as we would have liked through that process. We had the team reasonably deep on our implementation of ERP at the same time, so it was a bit of a storm. We've got multiple people now trained in the Datascape space on ensuring reconciliations take place daily.
Cool, thank you.
Councillor Alvin.
No, thank you, Simon. You asked the question about the timing of those. There's some pretty valuable reports to come in terms of the response stuff as well. Now we'd love to say I'm looking forward to those reports. Thanks.
Yeah, there's great detail in there, Simon. Thank you. If there are any more questions, Councillor Murray-Benge.
On page 103, Rangiora Business Park, we're going the risk review. I'd like to know a little bit more about that. We had an agreement with TCC that they would support the development of Rangiora, which of course they never have, and they invested in the Redwood Lane roundabout, and that has exploded their commercial industrial area down in that Kaimai area, Lower Kaimai, and it is at the expense, I think, of Rangiora. I hope I'm wrong, but we need Rangiora to succeed. And Councillor Ray has highlighted for me the sections that have sold. What is our concern here? The review? Is that just automatic?
Well, via the chair, the review wasn't of the Rangiora Business Park per se, but just an assessment of the risk profile that we as a council are running. So the report is some dozen pages or so at the present time. It's still in draft. I haven't signed off on it just yet. We have referred it to both the General Manager of Infrastructure and the ELT just for an initial comment, pending some what I understand to be short-term developments in terms of the developer agreement that we are currently in process of negotiating with the developer. So once we're able to revise the report in the light of those pending developments, then we will be able to release that report to the committee. It's not an internal audit review as such. It's just an assessment of our risk profile and specific recommendations in terms of how we as a council go about project managing our role in that particular development.
Right, if there's no, oh, sorry, Matthew.
Thank you, Madam Chair. Just maybe a bit more context. With these large industrial scale developments, they are generally very, very slow to get off the ground. If you remember Tauriko 20 years ago, it took a long time. Then they get some traction and then they go really, really quickly. The developer agreement that Simon's referring to is how council will collect those financial contributions or development levies on behalf of Quayside and other developers that need to invest in the park to make things happen. It's quite a complex and time-bound issue to deal with, which is probably why it hasn't been signed off yet, because no one's entirely happy with it. But the majority of the risk to council is making sure we get that timing right and don't expose ourselves to additional risk from a cash flow or cost perspective.
There's no further questions. Can I please have a mover and a seconder? Councillor Daly.
Just, Darren, the emergency response and preparedness review governance plans, roles and readiness for emergency responses. So the audit objectives assess the adequacy and effectiveness of governance arrangements supporting emergency response and preparedness. I know this is probably in here because of maybe the criticism from elected members after Cyclone Gabriel response, not Gabriel, the January events this year. Can you provide a bit more context on this one, please?
Well, I don't believe it's in there specifically in response to any one of those events per se. In terms of the methodology that we've applied to develop the internal audit program over the next 3 years, we presented the committee with a paper on that at its previous meeting or perhaps the meeting before. This is a particularly hot issue in terms of how we, in our annual reporting and long-term plan, expressing our risk profile, which is one of 4 or 5 sources of risk and developing a risk-based internal audit program. What I would say in response to the questions on the scoping of this particular review is that the nature of the review that we will eventually be undertaking could well be quite different to how it's expressed in the paper at the moment. We are going to have a meeting with our internal audit team. They have plenty of emergency management, and also Joe Linsky is lead for our emergency management in about 3 weeks' time. Part of that review I see may well be involving if you like, a 360 type of approach in terms of, yes, we will be having our emergency management arrangements and governance being reviewed by our internal audit partners, but also at the same time, we will be assisting them in terms of reviewing the program that they are proposing to apply. I understand that regional emergency management some 2, perhaps 3 years ago had planned to apply reviews of not only ourselves, but also our fellow councils within the region in terms of their emergency management readiness. It turned out that the program that they had, this is how I understand it, the program that they had developed proposing to be a one-size-fits-all didn't quite work that way. And for some of our relatively smaller sister councils, the review wasn't fit for their purpose as such. So what we're looking to achieve in part from this particular review is to see how the if you like a 360 approach in terms of regional emergency management, reviewing each sort of constituent within the region could take place over time, and also to feed into the national emergency management readiness as well. If that answers your question.
No, I think so. I mean, I notice also and one of my concerns in this area is the out of scope thing, operational response activities during emergency events, because I've got this thought in my mind that our civil defence controllers, the two main people have come from the same department within council, and when we have an extensive civil defence response situation, that takes significantly away from business as usual activities within council and for a prolonged period of time. And I'm just wondering if that is something that needs to be considered, because and maybe it's a question of splitting up the roles from different departments or something. I don't know. I'm sure everyone knows what I'm talking about, but I see that as a concern for BAU.
More than happy to take that on board in terms of when we're meeting with our internal audit team in 3 weeks to include that within scope. I think that's a fair enough comment and suggestion.
Right. Can I have a mover and a seconder, please, to accept the internal audit program? Councillor Murray-Benge, Councillor Sol, all those in favour, please say aye. Aye. Against? Carried. Right. Risk pool update.
The committee may recall at the previous meeting we had presented them with the correspondence attached to the agenda at page 121, the latest advice from Risk Pool, and this paper was developed in response to the queries that the committee raised at that time. So I'll take the paper as read and happy for any comments, questions, suggestions.
No questions? Okay, mover and a seconder, please, to accept the risk pool update. Councillor Murray-Benge, Mayor Denyer, all those in favour, please say aye. Against? Carried. Right, S&P credit rating, annual review.
So I'll take the report as read and through you, Chair. So this is pretty much as we discussed earlier with Bancorp. So we've had a downgrade in our S&P ratings. So it was lowered from our AA negative outlook to, our AA negative outlook to AA minus with stable outlook. And just bouncing back to the discussion this morning, TCC's one level below us at an A+ rating. I'm happy to take any questions, any further comments.
Right, we did talk about this at length this morning, but Councillor Daly?
Look, the question that went unasked was in response to Matt's suggestion that what is the threshold to maintain a Standard & Poor's credit rating. And the answer was like $45 to $50 million worth of debt. But so my question is, what does it actually cost to maintain a Standard & Poor's credit rating?
That's the cost to council this year to Standard & Poor's was about $80,000.
If there's no further questions,
LGNZ for that. We could have a membership of LGNZ for that.
Yeah. Councillor Joyce.
Yeah, I mean, it is always awkward that we have to pay S&P to audit us, but that's how the world works. And as was explained earlier, there's a direct benefit in terms of the interest rates we pay. But my question is more around, there's a reference to large infrastructure outlays. Is that, what's the residual part of our long-term plan after waters, or is that mainly relating to waters infrastructure and the bits we're passing across the water company?
So when S&P do their review, they're looking at the now, where we've been to, and what's going forward. They tend to look in the 3 to 5 year window, not necessarily the full 10 years of the long-term plan. They take our numbers, run them through their models. What they've discussed with us this time is the achievement of our plans. So the fact that we've delivered against our capital programs has had some impact to the comments that they've made in here on the infrastructure outlays.
Yeah. And I mean, if you look at the bottom of their statement on page 129, you'll see the balance after capital accounts is, and the balance after capital, is a percentage of total revenue, and the actual number is consistently negative. So basically that means that our debt's rising. So, okay. How do we fit in with our peers? I mean, we've talked about Tauranga, who have their own particular issues, but any idea what the rest of the sector is looking like around the country? And have there been similar moves for other councils? Do we know?
Matthew can answer that.
To check, Western Bay is actually one of the highest rated local authorities still. I don't believe, when I did do some research the other week, there's not many that are on stable outlook. That has been the trend for downgrades. And it's not entirely reflective of that local authority either. And I think that's a really important thing to note. It's reflective as the sector as a whole and the infrastructure that's going to need to be invested in, and the challenges come with that, and also the look through for these water authorities. So as a whole, and we had some quite robust debate with S&P, that we felt that we should have possibly been left on negative outlook, and not downgraded on the basis that the majority of our debt would be exiting the organisation, and they'd be likely to put us on positive outlook or upgrade us again. Their view was yes in isolation, but then when we go and look at the overall sector, the challenge of funding, the cost of infrastructure, and your waters entity as a whole, we see the sector. So it's not so much a reflection of us as a council, it's more a reflection of NZ Inc. and infrastructure in general.
And the only response to make to that is that rating agencies got absolutely caned in the global financial crisis for underpricing risk. So, the senior people at all these rating agencies would have been mid-level people at that time. And they got absolutely caned for letting investors down. And the other thing is that, don't forget, a credit rating is not actually about ratepayers. A credit rating is our ability to repay our lenders. And I note from a previous report that I've done on this council, they said one of the things they liked was the ability of this council to keep putting up rates because it basically meant that we had nice high income and ability to extend our income. If they've stopped saying that, then that could actually be a positive thing.
Okay, so if there's no further questions,
At page 112, we had gaps in our preparation of bank reconciliation, reduce the effectiveness of that control. There's a recommendation. Are you satisfied that you've got it under control? Jonathan?
So as part of our Datascape Go Live, we are moving through what our bank reconciliation process is and our new reconciliations. So there are some system challenges in that space at the moment, which we'll look to have resolved by the end of this week, where all our bank reconciliations going forward will then be reconciled on a daily basis. So yes, I'm comfortable with where we sit at the moment.
right, can I have a mover and a seconder, please, to accept the S&P credit rating report, I should say. Councillor Joyce, Councillor Daly. All those in favour, please say aye. Against? Carried. Right. Next, we're getting there, we're nearly there. Tri-party engagement leader, debenture trustee.
So this report is just for your information. So attached is the debenture trustee audit engagement letter. So this is an annual audit we have of our the debenture trustee, and again that's run by the audit office. The fees in the report for this year to the audit office for it are $10,600. This is for your information. This has been already signed by Mayor James Denyer and passed through to the audit office so they can engage and start their work for the 26th annual audit.
I take it there's no questions. I should never take you home ground.
What does this tripartite deed do?
So the tripartite piece of it is because it's a relationship between us, the trustees, and sorry, let me find the page I'm back on. Because it's three-party, that's what makes the engagement leader the tripartite state. Sorry, my system's not playing games.
Not the deed. Right, I just referenced the deed, that's all. Tripartite letter for the debenture trust deed, yeah. So what's the debenture trust deed? I'll talk after.
So councillors and councillor Robin, it's effective that agreement between ourselves, the audit office and the debenture trust deed. So they audit us to make sure we have aligned and followed what's set out in that debenture trust deed around our debt.
Right, it's relative to the debt.
Yep, because we issue under a debenture trust deed rather than a bond in our own name.
There's no further questions. Can I please have a mover and a seconder to accept the debenture trust deed report? Councillor Murray Benge, Councillor Dinsdale, all those in favour, please say aye. Against? Carried. Thank you. Right. Simon's back. Insurance arrangements via Botplace.
Paper 12.4 on page 144, primarily for the committee's information, Botplace. Their current agreement with Aon for insurance brokerage and risk management services expires middle of next year. So they will be embarking on a tender process to renew an agreement with a supplier as part of that process. Since this paper was written, we've advised them that Matt would be involved with the tendering process, and I would be representing the council in terms of the evaluation of potential suppliers. So with that, I'll take the paper as read and welcome any comments, questions or suggestions.
Right, any questions? Councillor Joyce.
How big is the potential field for this? I mean, I thought Aon were quite specialised, but I don't really know. I mean, are there lots of brokerages? There's a lot of brokerages out there, but some of them are tiny or even a big one in Bay of Plenty is too small for this work. So what's the pool like that we're choosing from for this?
Well, I'm aware that Aon provides these types of services to some 67 local authorities in the country. You may well be right in terms of the field isn't as big as we may wish for, but it's still an open tender process that's operated by Botplace. So we shall see in terms of responses to the request for proposals that we may or may not receive from other providers. I'm sure Aon will be certainly presenting us via Botplace with a proposal. Certainly with the conclusion of the current agreement in the middle of next year, it is an opportunity to renew, revise the nature of the service that they are providing to us via Botplace. So with that in mind, it's good practice to go through an open tendering process.
Also, I think, councillors, one of the concerns and the reason for this is exactly that Aon effectively represent just about every single local authority in the country, and it's that concern of concentration of the pool to make sure that we are getting the best value. And there are a number of other very, very large professionals out there as well.
No further questions. Can I have a mover, please, and a seconder to accept the report on insurance arrangements via Botplace? Councillor Murray Benge, Councillor Beach, thank you. All those in favour, please say aye. Against? Yeah.
Very pleased that we've got Matt involved in this process. We can have a great deal of confidence as a result of that, and so very pleased. In case you're wondering.
No pressure.
Councillor Beach, did you want to speak? You're happy?
Go along with Margaret.
Okay, great. So all those in favour, please say aye. Against? Carried. Right. Risk update.
So the committee will recall previous meetings where I've undertaken to provide committee with the latest report that we get from Aon in terms of a risk update, which you'll see from pages 151 onwards in the agenda. This report we received on the 9th of July, so it is particularly timely. We have a number of references to the long-term plan identified in the course of this particular risk update, and I've been in touch with our long-term plan group to make them aware of the particular points that are being raised, so that we do have a coordination between these sources of information. What we're working on in the immediate future is the risk presented to us with the forecasted El Nino weather pattern that's expected to take place in the foreseeable future, as well as I'm aware that our emergency management are working on the avian flu and have developed a page for our website in response to the risks presented to our community from that. And also one item highlighted in the report is AI-related risks. Certainly been in the news media recently with regards to AI models developed, for example, by OpenAI in the US, which have inadvertently hacked into other AI models and have been identified, interestingly enough, through the use of open source AI developed in China. Interestingly enough, so AI is obviously of a particular importance to us at the present time, not only for the utility provided by that type of tool, but also the risks in terms of cyber security and so forth. With that in mind, I would note that in the early part of next calendar year, we do have on our internal audit program a cyber security risk assessment. So we will be taking, I'm sure between now and then there are going to be more further and perhaps developments that we can't quite contemplate at the present point in time, but we will be taking into account all of our known knowns, if you like to put it in those terms, when we scope the cybersecurity internal audit review at the beginning of next year. So with that in mind, I'm happy to take the paper as read and welcome any comments, questions and suggestions.
It's an interesting time with AI. I do find it quite terrifying, to be honest, how far it can go. But what I want to just point out, and it's just a comment really, nothing by way of any criticism of anybody here, but I find it interesting that Aon take it upon themselves to write in their report on risk about misinformation, polarization and trust. And I've got an idea for them to actually mitigate this risk. I would suggest that they perhaps don't read a newspaper or listen to any news on TV. So if we have any questions, Councillor Daly.
Look, it's really in relation to council's induction policy for elected members, and that we were asked to sign a non-usage or no sharing or usage or no sharing of AI developed or assisted content through council channels other than what was officially provided, which is the Microsoft Copilot. And there are more extensive uses of AI amongst elected members than myself, I'm sure. But and I've had a recent request from a community board chairman asking if I thought it would be a good idea to expand the availability of other agents or upgrade the license for elected members. I guess staff already hold or have use or access to professional versions of AI, whereas elected members are limited to, I think, the basic version. So I just want to comment, a response from staff as to whether they think that would be useful. One, to increase the quality of the AI that is provided to elected members, and two, the maybe more than one approved AI agent than Copilot, for example, Claude, which I know that some staff members use in addition to Copilot, and probably others as well.
Well, I could certainly note your comment. I think in terms of the if you like, the non-sharing policy is probably a matter of licensing, I would guess. Aaron is the general manager in our IT for our IT division. So you know, if we do have comments in terms of availability of product and whether elected members and others are enabled to use that, I'm sure we could take that comment noted and follow up on it.
Matt, did you want to comment?
Probably a comment on that. In terms of Copilot, you actually have the choice of which AI agent you use. You can actually use Claude or OpenAI. So it actually has that flexibility within it already. In terms of organisationally, not all staff have access to Copilot. In terms of the enterprise version, I think we've got 50 licenses at the moment that we use. And I think they're at $350 a year, some $400 a year. So if that's something that elected members wanted access to, we can discuss that with the IT team and find out the specific rationale. But it's much around being very clear around where your information is coming from and how you're using it when you're using it in your council capacity.
I think if I can respond, I mean, I've paid for pro versions of ChatGPT and also Grok in the past, and I think the main, well, I'm not sure really. I probably need an answer to how much more sophisticated the professional version is, as opposed to, is it just giving you access to more frequent usage of it? Because I found that they get to a point where you get to the paywall if you ask too many questions. So is it?
So, you're absolutely right, Councillor Daly. The big difference between the free version and the one you pay for is you get a lot more usage. There's now some quite good information out there around how much AI usage is actually starting to cost. Now they realise, or they've known all along, they can monetize it quite heavily. So we'll see the cost of AI going up significantly in the next few years.
And if I can, oh, sorry, Aaron, I've found when I did an AI search on best AI agents, it actually come up with a link a link to 9 examples of New Zealand councils using AI to reduce costs to ratepayers. So it's quite interesting, and perhaps I could just share this as a link to the article. But Hutt City Council, for example, collates property information, LIM reports, Auckland Transport digital chalking of parked vehicles that are illegally parked, Selwyn Council, swimmer safety, Nelson City Council, public submission processing, Dunedin building warrants, Timaru District Council. So I mean, there are potential benefits in terms of general administration uses for AI that could benefit our ratepayers.
Absolutely something that we're looking at and investigating, and certainly over the next 12 months, we'll be harnessing AI a lot more with the new Datascape product being available that's AI enabled. And certainly in Alison's space, they're looking significantly how they can use AI to streamline processes. Whilst that's great, we still need to work through it and make sure it's going to deliver on what we expect it to deliver on.
And through the chair, further to that commentary, so I am talking for this LTP, what that looks and feels like. I think it's really important from a risk perspective that we do this through a policy or strategy position rather than an ad hoc way. So that's number one, and that's slated to be starting very shortly and or into the first year of LTP, so that we have an organisational approach to make sure we've got the right safeguards around the opportunities, but also the risks. The second one, a lot of those the uses, very good uses of AI, they're very process driven. And so there is a lot of opportunity to unlock that. But that's quite a systemic view and usage versus maybe a more where it started, which was elected members using it for particular aspects. And that really does need an investment case decision and the processes to be built behind it in order to really unlock that value. And the third thing from a risk perspective, a free version versus a paid version, there are cybersecurity and data ownership conversations that do start coming into that, which is really important when we're dealing with publicly available public information and or sensitive information. And so that would be a safeguard from a risk perspective that we certainly need to be considering from a policy position before we open Pandora's box. So thank you, Madam Chair.
Well, I think Claude might be claiming EAP from the council soon as well, by the sounds of things. Okay, so do I have a mover and a seconder for the risk update? Councillor Murray-Benge, Mayor Denyer, all those in favour, please say aye. Against? Carried. And a mover and a seconder to move into excluding the public. Okay. Sorry, Councillor Sol, Councillor Dinsdale, thank you. Right, what do I, if we can move out?